mostly because they did harder lockdowns and were older countries, and they also had a greater dependence on retail and services as a driver of growth. And when that got hit by lockdowns, their GDP suffered more. So we're seeing what nearly 4% growth is what the IMF is forecasting for 21 and 22 for Sub-Sahara, which is slightly less than other regions of the world, but that's because the other regions of the world were bouncing back off bigger falls. So in that regard, it's been not bad. Again, Africa has outperformed, as it did in 2008-9 during the global financial crisis. And then that was because there was less dependence on banking in Sub-Sahara particularly than other regions of the world. So the COVID story is not probably the most important in terms of where we're going now. What really is having a big impact is this inflation story, this rise of commodity prices. We had to dramatically upgrade our numbers for the oil price assumption for 2022 from $65 to $80 for this year. And for Nigeria, that makes a big difference. Growth doubles from 2% to 4%. Well, 4%, especially when oil is around $90 as it is today. So you've got much stronger growth now, looking likely from the oil exporters, from the copper exporters. We just saw Democratic Republic of Congo get upgraded for the first time in its history on Friday night to B-, actually the same rating as Nigeria's got. Because people are saying, if we want this electricity revolution, this green revolution, then where are we going to get the copper from? Good news for Zambia, good news for Congo. And the oil story is benefiting Angola, which has just been upgraded by the rating agencies as well. So that's the story which I think is changing in 2022, and that so far investors have not been putting much money behind, because I think it's managed to surprise quite a lot of the investor community. And right now we're still seeing that shakeout. We're seeing people sell off bonds in the US in the last month or so. Sadly, that's hit African bonds too. And this is one of the things which I think is going to sit there as something we're trying to watch two things at the same time. First, the improvement in the export story for so many sub-Saharan countries, at the same time as greater costs on the debt that's been taken on over the last 5 to 10 years. And as long as commodities stay high, the debt numbers look okay. If commodities start to fall, but interest rates stay a little bit higher, then that debt burden is going to be more and more of the challenge that we talk about over the next 1 or 2, 3 years.
Thank you so very much, Charles. I like the inflation story dimension that you brought into the conversation, and the implications of that, especially not only for global economies, of course, how this will actually impact African economies. Thank you so very much. Professor Peter Quarty, I will, given the work that you do in Ghana, and I believe also some other African economies, please also share your thoughts on the outlook. I mean, your current thoughts on how Africa is probably recovering, or we are not recovering, or there's really no hope, or there's so much hope in terms of what is happening in Africa today. What are the metrics, what are the dimensions, or what are the things that you are seeing today that you think are shaping the recovery from COVID-19?
Well, thank you. Good morning to you, Okiti. Good morning to your distinguished panelists. Good morning to your discerning listeners and viewers. I am happy to join this morning's discussion, particularly to connect with my good old friend Okiti, whom I haven't seen since we graduated. We have a story to tell, but not on this platform. Yes, COVID actually has taught us a lot. We have been taught how to manage a pandemic because we haven't seen a pandemic of this scale in a very long time. So I believe it's taught us to look inward. It's taught us our local manufacturing um, firms to also look at opportunities rather than looking at the negative things or the negative effects of the pandemic. We've seen agric also, for instance, being more resilient. In the case of Ghana, agric has been quite resilient due to COVID. Within the manufacturing sector, we've seen the pharmaceuticals come out strongly, manufacturing PPEs and all the other things that are required to fight the pandemic. So COVID has taught us a lot. It's taught about the need to be resilient. It taught us about the areas that requires a lot of support in times of crisis, and then the areas that are resilient and also can be harnessed anytime there's a pandemic. In terms of the macro, the growth prospects, it has also brought revenue challenges because as production in certain areas are not going on, like the hospitality industry and many others, tourism and the like, you find that government revenue is suffering, whereas government expenditure is going up because it has to fight the pandemic, it has to spend money on other areas. It didn't used to providing feeding food, providing um, vaccines, and many other things. So we see deficit ballooning or a widening of the deficit um, as well. And that also led to debt challenges because as we recording deficit, then we ought to borrow to finance some of these expenditures. And so if you look at the debt numbers, when I looked at Nigeria, it wasn't debt GDP is around 34, 35%, but Ghana is around 78%, South Africa around 80%, and many other African countries. We have seen livelihood threats as a result of COVID. Some have lost their jobs, others are trying to pick up, some income have been halved, and so on and so forth. So it's led to civil unrest, agitations, labor agitations, and in some cases, we've even had a coup d'etat in Mali and other kinds of unrest. In terms of recovery, yes, we have seen some improvement and some prospects because GDP growth in Ghana, for instance, is about around 5%. In the last quarter, no, the third quarter of 2021, we've seen about 6% GDP growth rate. So on average, we are looking at a growth rate of about 5% for 2021. The ECOWAS average is about 3.6. It's not bad. I mean, having gone through such a huge pandemic and with a growth prospect of around 3.64%, I think we are recovering quite significantly. What we ought to do is to find the vaccines. I think we need herd immunity. That is where we haven't been able to do much. Africa is not getting vaccinated as much as it should. Although the death rates have been low, we ought to be vaccinated so that we can get our economy back on track. So I'll stop here. I believe other panelists would also have to speak.
Yeah, thank you so very much, Peter. And I'll come to you now, Ben. I mean, your work in Nigeria, actually following our conversation, is very, very extensive. You not only work with Nigerian government, you work also with businesses that are trying to invest in Nigeria. And even though you're also based in Nigeria, I believe you have a great understanding of what is happening in other African countries, especially from the UK perspective. So, how do you think the economics and the investment landscape is shaping up in Africa today? I mean, what are the businesses, especially international businesses that you interact with? What are they saying? What do you think they are looking at? What are they watching? And of course, what do you think is motivating them today in relation to investments in Africa today?
Well, thanks very much. And yeah, no, I'm based here. I'm the Deputy High Commissioner here in Lagos, Nigeria, but I've worked in Rwanda and South Africa. It's actually my second time in Nigeria, so it's interesting seeing it from 2014 to 2017, but then coming back with a fresh eye. I mean, I think so much has been said, but to focus on perhaps things that haven't, at least in the same to the same degree. We had COP26 at the end of last year, and I think that interest in what renewable energy can mean for Africa is definitely something we're seeing. We're seeing British companies who are trying to, and we're encouraging them to break into the market, provide sustainable energy solutions. We're also seeing, to be honest, some of the barriers they're coming up against. So, in Kenya, for example, there is no duty on imports for domestic solar home systems. In Nigeria, sadly, there is at the moment. Trying to find ways through that so that we can actually get renewable energy affordably to people. We're seeing as well, I think, and it's been referenced, but we're seeing tech as the big growth area, not just in Nigeria, but I think more widely. It's not a new story necessarily, but I think innovation around that. So in Nigeria, what will be the impact of mobile money, to be honest, over the next 2 to 3 years? We're very hopeful. And again, in other parts of Africa, we've seen mobile money already take off, but not in Nigeria, not always, not in other parts of Africa as well to the same degree. So, and if you look at, say, mobile money coupled with some of the renewable energy options, then perhaps it's possible, frankly, to start growing businesses in parts of Nigeria where payment has been the issue, where securing payment has been the issue. And again, I think that's true for other bits of Africa. I think some of the trends that are challenging to investment we should also reflect on. So security is the key one. I mean, again, in Nigeria, we've seen that, but it's not just in Nigeria. Across West Africa at the moment, we've got a series of big political upheavals. ECOWAS heavily engaged to try and address them, but it's difficult. And I think that will impact on investment choices, along with electoral change, electoral choice over the next couple of years. We'll see in Nigeria next year, but other places too, where businesses are pausing, reflecting, understanding what they can do, what the choices that come to them might mean. So I think some of those they're not new necessarily, but they're coming into sharper focus. And certainly when it comes to Nigeria, we, the British government, are encouraging businesses to look away from oil and gas and look towards the opportunities, tech, fashion, music, some of the spaces which are growth, but not necessarily instinctively obvious to businesses in the UK. And also to try and lift what are, unfortunately and sadly, very low foreign direct investment numbers in Nigeria at the moment. We know that to be true. We don't celebrate it, but how to change that. A number of businesses still struggling with the challenges around foreign exchange here in Nigeria, and quite rightly, we're trying to see what can be done. But it's an issue, and I won't pretend it's not at the moment, which are affecting choices, at least here. So those are some of the key things. And I think for me as well, I mean, I'm based here in Lagos. A lot of UK business comes towards Lagos, comes towards the southwest. And again, I think this is true for other bits of Africa. The gap between where you can invest and where you cannot easily. I mean, statistics are always misquoted, but I mean, we look at, I think it's 4% of people below the poverty line in Lagos. Okay, that's not great, but that's comparatively low. I believe I think it's Jigawa at the moment, 67% of people. So, where you invest is heavily, determined by where it's possible to invest, and frankly, at the moment, that's still too few places with confidence. So I think we're going to see those trends impact on choices. Thanks.
Thank you so very much. Before, I'll come back to you, Ben, because of one or two issues that you raised. But before then, I would like to encourage those that are joining us online to please send in their questions or their comments. Would you please, yes, please join us, slido.com, #ABC2022. Please send your questions and, of course, your comments. I have a follow-up question because you mentioned technology, and if there's anything that has happened in the last 2 years, at least on the positive side, is that there's been a number of investments in technology, whether it's software, unicorns and all this kind of thing. But people talk about 1 or 2, 3 reservations. So let me say, the first one is they say, all those money raised really don't come to Africa. That's number one. Then number two, there's uncertainty about their sustainability. That's number two. And of course, number three is the scale. I mean, the scale is, it's good, but hey, the scale is not really something that we should rejoice about. I'd like you to please respond to those three dimensions of those reservations, and in relation to the investment and what it means for African economy, or the shifts in African economies.
Yeah, I mean, I think it's difficult to answer any of those three with absolute confidence. In tech is a small word with a big space in which a lot of businesses are doing different things, and I think that's part of the challenge. Actually, you know, some businesses are significantly more viable than others, and some of the tech businesses that have come through have shown that. What I would say though is, and it's not, I mean, COVID has pushed all of us online or tried to be online. What I would say is it's for the businesses that have emerged during this period or really come to fruition, when you talk to investors in London, for example, these are the businesses they're looking at. They see opportunity, something fresh, something new, particularly when compared with traditional petrochemical industries and the, you know, the projections around that. So, I mean, I guess for different businesses, how sustainable will they be will be a question. The reach, I mean, we, for example, both try to encourage investment in businesses, but also have UK overseas development assistance programs deliberately designed to try and help people who otherwise couldn't have digital access, essentially get digital skills, because we recognize that actually for many people this is just a space they can't get to for the reasons that are obvious. So, you know, ensuring and helping people from that side to be able to engage in the digital economy, but also to become part of it, that's key, that's huge, and we and others are trying to do that. But yes, nobody I speak to in London says tech, I'm not sure. They say tech, what about that? What can we do? And I think that's a really encouraging sign.
Thank you so very much. Charles, let me come back to you. I believe if you check your data, in 2019, that was before COVID, the fastest growing economies, at least 5 of them in the world, were in Africa. And most of them expanding at more than twice the rate of the worldwide average. I mean, in this category was Ghana, South Sudan, Rwanda, Ethiopia, Cote d'Ivoire. Now, given where we are, and as much as I know that you advise investors in relation to investment in Africa, 2 questions in one. When do you see this level of growth coming back to Africa? I mean, the 7%. I'm glad that Peter said Ghana is likely to do 5% in 2021. But here we're talking about almost 9% growth before COVID. 2 things. So when do you see this kind of growth coming back in Africa? And what are you telling your investors about their opportunities on the continent?
It's the growth, to get the sustainable 6, 7, 8% growth that Asia's had over the last few decades now, and we are going to see in Africa, it requires industrialization. It requires an educated population, literate in any language, but literate, 70 to 80%. It needs electricity, and it's very, very much supported when domestic interest rates are 2%, as they are in Morocco, say. And the reason they are is related to the fertility stuff that I've talked to you about before, that when you have huge families, big families, interest rates tend to be very high because there's no cash in saved, because who's got cash when they've got a huge family? Only a very few lucky people. So Morocco's got all of that. It's got the low fertility, it's got the low interest rates, it's got the high industry, and it's the industrialization story because of electricity, and therefore its growth rate could well be 6, 7, 8% a year as we go through the 2020s and into the 2030s. And countries that are going to follow that, I think Ghana's got about the best chance in West Africa of following that over the next 5 to 10 years. Great education, electricity's finally there, it's just enough. Fertility rate a little too high, which is why there's a little too much dependence on foreign borrowing, but it's nonetheless heading in the right direction. And then by early 2030s, I'm thinking, Ethiopia's slightly more problematic. The literacy rate's still too low, but Kenya's looking good as well. Egypt's going to be another one of these powerful stories. So there's an industrialization theme which is going to support high growth in those economies. Otherwise, there's a reliance on debt. When you use debt to fuel investment, as Cote d'Ivoire has done, Rwanda has done, Ghana has done, actually, you can get these good growth numbers. But the risk is going to be, sometime in the next few years, that we see a big interruption in that growth rate for 2 to 3 years because of debt problems. And Zambia has obviously already seen that. Ethiopia is now in that. And I think there's going to be more to come, unfortunately. So it's going to be a very mixed story. I think it'll be quite a struggle to generalize. Having said all of that, when commodities are up, it's quite an easy way to get, for a year or two, some of these very high headline growth numbers.
Thank you, Charles, but I'm going to follow up with a question. I mean, you talk about industrialization in Africa. I mean, industrialization is a very, very broad concept, broader than manufacturing. So when we talk of industrialization in Africa, many people argue that we cannot quite follow the trajectory that the Asians have followed because things have changed. So what pattern of industrialization do you see emerging in Africa that makes us either more competitive or at least be able to offer the global economy a greater value?
I'm not convinced that it's changed. What's happening in Bangladesh for the last, Bangladesh had the same population as Nigeria in 2008. They have managed to get growth of 7% a year, 6, 7, 8% every year for the last 12 years. It's on the back of a textiles boom, all supported by a low fertility rate. They have less than 2 kids on average per woman, and therefore plentiful domestic savings. No need to go borrowing from abroad. No need for IMF support. And that model's working. Vietnam has been doing it for even longer than Bangladesh, and it's working. So I don't think there's any need for us to view the industrialization story as changing. China's getting expensive now. The cheapest province in China has got a minimum wage of $200 a month. The more expensive province is $400 a month. Now in Nigeria, as you know, it's under $100 a month. So it's the cost advantage is working in Africa's favor every year that China gets more and more expensive. And those factories are moving, but they are moving to places. Fertility is low, and therefore interest rates are low, so there's lots of financing. And Bangladesh has the advantage for now. But it's not going to be the story forever, because fertility rates are falling, education numbers keep on getting better across Africa, and therefore we're going to see the industrialization story happen on the continent, as it is already happening in Morocco. It's leading the second industrialization wave right now.
Oh, thank you, Church. So, Peter, let me come to you now. I want to move to another dimension of this. The institute where you work, I believe you have serious engagement with government, at least the government of Ghana, and you also have interactions with other policymakers in African economies. What do you think is the consensus today in African thoughts? I mean, about how to grow their economies, or we still don't have a consensus yet?
Well, I think the major consensus is to promote industrialization. It looks like industrialization and value addition is being on a steep decline. If I take our own case of Ghana, you would find that industry, in most cases, for the past decade or so, have been growing sometimes at negative growth rates. Many African countries have become import dependent, less production, less manufacturing, more of consumption, and become a distribution network. So now the consensus has been, if you really want to transform, then we need to transform industry, we need to transform agriculture, we need to transform the value chain from agri to industry, etc. And that is where the jobs are. If you don't transform industry and you become an import dependent, you consume most of what is produced outside, you are creating jobs outside the country, you are creating jobs outside the continent, and that will not augur well for you. Then also the issue about market. You see, with the AFCTA, we have a larger market. They need to ensure that we grow this larger market. Africa has a very large population. If we are able to produce at a reduced cost, we are able to produce differentiated products. Otherwise, you produce the same thing, the opportunities for exchange, for trade wouldn't be there. But we ought to produce differentiated products of good quality that we can trade across the sub-region. At the moment, trade within the sub-region is very, very low, and that again doesn't help. So that's two areas where there is a lot of consensus: transforming manufacturing or industry, transforming agriculture. So we add more value to agriculture, not just exporting primary products, as well as growing the regional trading bloc and within the continent or the sub-region. Thank you.
Yeah, let me follow up, especially on the issue of, I mean, we had a speaker here yesterday, and he said that he graduated, he did an economics degree 40 years ago, and the fundamental economic challenges that Africa faced 40 years ago still remains the same today. From my own side, I would say that okay, we have seen incremental changes over the years. But one thing that is common with African economies, you see those incremental changes, and of course there's a shock, and you come back down again. You see another few years, you see some incremental changes, and you have another shock, and you are back to where you started. So basically, when we talk about this incremental, when do you think we'll begin to see something that we genuinely think it is not only grounded, but it is actually sustainable? Peter, yeah. I mean, from a policy perspective.
Yes, you are very much. Yeah, we are very much right. We often, if you look at the growth episodes, we improve, and then sometimes we come back, and then we improve. So we take 2 steps forward and then a step backward. That back and forth always happens. So what that lesson should teach us, or what that experience should teach us to plan, is most of our development plans or medium-term plans are prepared without a shock or a pandemic in mind. So anytime there is a shock, we are not able to recover, we are not able to withstand the shocks. But if we plan with a pandemic or a possible shock to the economy in mind, then certainly we'll not have this back and forth. Once we also add more value, value addition, I emphasize that point, is very low. Agriculture value added is low, manufacturing value added is very low. So anytime there is a shock, we get back to where we started. And we have also been dependent on commodities. That has been one of the major areas, export of raw commodities. So when commodity prices increase, like oil prices, gold prices, cocoa prices, then we record good growth numbers. As soon as commodity prices tumble, then we are found wanting. I recall in Nigeria, 2016, there was a kind of a recession because oil prices went down. We need to diversify our economy and be less of an import-dependent, commodity-dependent country. If we don't do that, then of course this growth episodes and this back and forth will continue to happen.
Yeah, thank you very much, Peter. So Charles, let me come to you, and we begin to take the final thoughts and then ask the audience if they have 1 or 2 questions. The share of FDI, and I want to specifically ask you about the share of FDI, Africa FDI in total FDI in the world is less than 10%. Well, in fact, in 2020, it was just about 5.9%. But if we are really attracting investment and we are putting the right policies in place, we have the population, maybe the market is not growing as much as it should, we're supposed to be adding value. So, what are the things that these investors are thinking about? What are the views about investing in Africa? And are there fundamental things apart from the ones that you have said that you think is also important, especially in the area of economic management?
Alex, it's an interesting question. I mean, what's always struck me looking at FDI and investment is that it always goes to the richest countries. The richest countries get most of the foreign direct investment from other rich countries. It's just money flowing between America and Europe, and then occasionally to some of the more developed states in Asia as well. So it's quite hard to get hold of that FDI flow. And what is it attracted to? It's attracted to rich, wealthy markets in the main, most of it. And it's the same with trade. Trade tends to be highest when you've got big industrial countries trading with each other. So it's really tough to kind of get your foot into the door and grab some of that because just a small piece of that big pie of cash is so helpful. What are people looking at? We've already had the deputy the commissioner from the embassy talking quite rightly about this interest in fintech, because I think what people have found so attractive about that, or mobile towers business. We did an IPO for a mobile towers business in Congo the other day, and what people like about that is it's a theme which they can understand. If a mobile tower is useful in America, it's useful in Congo. In fact, it's probably more useful in Congo, and people will pay for that. You can see the attraction of the fintech. So it becomes quite an easy way for money to come in. And I think that's why you're seeing such appetite for the fintechs. Right.
Yeah, thank you. No, okay, go ahead. No, finish.
But for the big money, sorry. No,
you can
I was
finish.
just going to say it's going to be that still,
Yeah.
some of that oil and gas, the mining and so on.
Yeah, so Ben, one of the key things I take from what Charles just said is understanding. How do diplomats such as yourself provide your home country investors with that kind of understanding that makes them feel comfortable to invest not only in Nigeria but also in other African economies?
Thanks very much. Yeah, no, I think it's exactly. So familiarity, at the very least, familiarity with what you're investing in, I think is really important. One of the real challenges with COVID was travel, to be blunt, and we hope that's changing. People very reluctant to do something new in a place they don't understand, where they're not familiar, even if they're potentially familiar with the kind of thing they're investing in. So familiarity, helping people to come, understand, manage some of the security risks, connect correctly with people they can trust, and understand how to navigate that landscape. That's one. I think the second is to show them where they need to see change and where we're pushing for change and where change can come, so positive trend. So we're hopeful, for example, that some of the difficulties that people face around foreign exchange will start to ease. If they see that trend ease, I think that will attract them. Similarly, when it comes to infrastructure and being quite specific around energy, where they see the possibilities for energy, it makes it much more attractive to invest and to manufacture. And you asked the question earlier about tech. Small world, big space. For example, if you were investing in metering and you wanted to produce smart meters to help with energy, it's a lot more attractive to do that when you know you can do it and you understand the market and you've got a trusted partner and it all comes together. So I think those things we try to do, but I think the positive trajectory around those issues, everyone knows they're a challenge, but the positive trajectory around those issues is really important to attracting new people, but also keeping existing business.
Thank you so very much. We have just about 10 to 15 minutes more. I want to take questions from the audience, and if there are any questions online, I would also like to take them. One of the things that we did not do well yesterday was engage, and we are determined to try and change that today. So if there's a roving mic somewhere.
There is. We have one.
Okay,
so if you do have a question, please raise your hand.
Please just your name, your company, and the question straight, please. No stories, please.
By the way, Doctor, there are some questions on the platform.
Can I have them? Okay. Let me stand up.
Probably easier for you to move to the podium, yes.
To go to where?
Or just to stand there so you can see it clearly.
Yes. So, what have been the reactions of company operating in renewable energy space, which is more retail in nature? How easy is it to attract funding from banks? I believe that question is directed at you. And then there's another question. How can we bridge the gap of the youth in Africa on the knowledge of the energy, the knowledge of the economy and investment? Okay, investment. Is there a platform to learn? How can we access this information? I don't know who to direct that question to. But please take the first question on on renewable energy.
Yeah, thanks. So, I know, so it's a question, I think, about Africa, but and I can answer a little about that, but on Nigeria specifically, we've seen a host of new companies that are saying, well, how can I get my product into the market? But you've also seen a question of scale, and I think that's the real challenge with renewable energy in Nigeria. They're willing to put solar panels into businesses, industrial complexes where they could see return, but they're much less willing to put them into poorer parts of Nigeria, challenging parts of Nigeria where the return isn't so clear, where the investment up front is difficult. That's still a problem. But we're seeing people say, well, how can it be done? And I think that's what we're encouraging. I think in other parts of Africa, South Africa, has just lifted the cap, hasn't it, on independent power production. Huge interest there, I think, now, not just from British, but others, and well, what can we do with that? And I think that's where I think the conditions and that signal have really triggered a rush of interest in how that can be done. I hope we can see that in other parts.
Before I take questions from the audience, in relation to the second question, I think I don't know where that came from, but I hope the person is a business subscriber. Just read Business Day. You get all the knowledge on a daily basis about economy and, of course, investments. I'd like to take a few questions from the audience.
Yeah, so we have a question here from a lady in the audience. Please stand.
Your name, your company, and if possible, who the question is directed to.
Thank you.
Good morning. Thank you very much for this opportunity. My name is Faith. I'm from Sabi Writers. So we are talking about, my question is not directed at any person in particular, so any of the panelists can answer it. Talking about economics and investment in Africa. Now, as someone who works for a startup that's doing really well, I want to ask, is there hope for MSMEs? Or is it only the energy, the big sectors? Is there hope for the small, thriving businesses in Africa? How can they access these investments? Thank you.
Okay. Who wants to take up that? Peter, I think you should. You're on the ground there in Ghana. I'm sure there are similarities. She's based here in Nigeria. What's the hope for SMEs, small companies that want to scale? They're already thriving. What's the hope for them in Africa?
Well, I think it's a very good question. The MSCs face challenges, but they have prospects as well. Quite the number of businesses that start fail. We are told about 70 to 80% of startups fail. But there are a good number that are also successful. What it requires is for you to be more consistent, be hardworking. And you see, one thing with business in Africa is that you ought to supervise. You ought to go the extra mile. I am also an investor. I have over 100 employees. When we started very small, but now I can say that we are now a large company. How did it happen? You ought to constantly work hard at whatever you're doing. Do the extra mile, go the extra mile. Don't just do business as usual. Otherwise, you would not survive. The terrain there is very rough. And I can assure you, there are prospects, there are businesses, there are banks that are willing, and other finance institutions that are willing to lend, provided you have a business in place. If you have a business plan, you have a business that is thriving or has prospects, certainly a bank or an institution is willing to support you. But don't be too quick to assess external funding. If you can access your own funding or funds from relatives, friends, etc., or even supplier credit, use that first before you jump to the bank, because it comes with a cost. And if you also borrow from a traditional banks who have lower interest rate, if you go to a microfinance, you might pay more. So these are all some of the things you ought to do. But for me, the key thing is supervision. You ought to supervise your business. Don't start the business and leave it to people to manage. and account to you. If you don't have the right structures in place, you will not succeed. Thank you.
Thank you so very much, Peter. Charles, I want you to also answer that question, but in a different way. So let me broaden it this way. The African continent is that of, a low productivity, serious externality challenges, capital is scarce, and of course, so you see very few number of MSME actually scaling up. So how would you expect, not only from the SME's perspective now, but government in African economies to tackle these challenges one after the other in a granular way?
Okay, I will get to that. First, I'd just like to respond to the lady and say that what she's doing is absolutely vital. And it's her, in this companies, the sort of companies that she's working for are going to be what produce the biggest success stories over the next 10 to 20 years' time. But it's going to be hard because there will be, the most obvious is this lack of finance. You will not get cheap financing unless you're very lucky and know someone with a big, deep pockets. You're not going to get cheap financing. Now, that's a problem. It's going to slow down your potential growth and your potential, your success. It's going to make it harder. But it also means the return on your profits could be very good because lots of people haven't got much capital. So if you're actually doing it, making a success, the company's growing, it becomes very, very valuable. And it's not long before the private equity groups who are fighting actually to try and find opportunities to invest in to find the right-sized companies to invest in, they'll be knocking on your door and saying, please, can we get involved and give you some cash? But you've got to get big enough first and $50 million plus kind of revenues, and that takes a really long time to get there. What can governments do? Short run for the countries with a lack of domestic savings, you can borrow externally, and a lot of governments are doing that, but there is a limit to that. The other way is, where can you get money from? You can make yourself extremely attractive to foreign investors. And that was, that's what countries like Singapore did for a long time. And the third thing would be to run a current account surplus, to make sure your currency is so cheap that you've got a current account surplus and a lot of dollars floating around inside your economy that you've got from exports. Now that hurts on the import side. It hurts in terms of what people can afford in terms of imports, but it also means that there is a supply of cash. But current account deficit and lack of savings and too high external debt, well, that's Ethiopia, and then you're in default. So you've got to choose one of those options to try and resolve the problems.
Okay, thank you so very much, Charles. Is there any other? I can take one more question. Okay, please, that gentleman over there. Your name, your company, and of course, straightforward to your question, please.
I think we also have one more on Slido. If you want to take it, I think one more just dropped.
Let me just check.
While you are checking, I wait for you. Okay, I should ask. Okay.
I think we've answered most of that.
Okay,
please go ahead.
okay. My mistake then.
My name is Pere from BGE. My question is to the chap Renaissance Capital. You talked about Ghana having a 2% interest rate. You also talked about...
No, not Ghana.
Is it Ghana?
I think it was Morocco.
Morocco, fantastic. Yeah. And Ghana is going in that direction. I don't know what the rates are in Nigeria, and I believe
it's over 10%. I think the last one was 11.5. Is that correct?
Okay.
Interest
11.
rate.
So if a small business owner goes to a bank, he gets it at 11%. I don't know, maybe 26%.
Yes, it was.
I don't know. So my own question is, how will Nigeria ever get to that low interest rate regime that actually stimulates economic growth and consumption and all of that? So can you actually say something on that?
Charles, did you get our question?
Yeah, I got it all.
Okay.
There's two ways. Short term, run a current account surplus, helped by this oil boom we're seeing right now, the oil price boom, that actually helps. And I would guess that that will help bring down interest rates somewhat in Nigeria. But to get to Moroccan levels, you've got to have a fertility rate of 2 kids per woman, is what the data is telling us. And Lagos would have it, actually. If Lagos was independent, well, not quite 2, but it's getting there. If Lagos was independent, you'd be in a very different spot, because the fertility rate there is very low, much lower than the rest of the country. The education numbers are extremely good. The literacy rate is over 80% 5 years ago. I think Lagos could be a very successful independent economy. But as for the country level, you need to be educating everyone, particularly in the north, and they need to be having smaller families, and then they start to save money, and then banks get more cash sitting there in the banks, and they lend it out to you more cheaply. And this is how it works. That's going to take 10, 20 years, 20 probably at best. The United Nations says 40, but I'm optimistic that the Nigerian government will do something about this.
Okay. I want to end this conversation now, and I don't know whether this is the right time to say well, but there's something that Charles said. So let me just say it on a very, very lighter note. Charles said that, of course, capital is not cheap in Africa because it's scarce. So what often happens, which you described, is that when you're a small company, you don't get the finance, but when you become big, they throw it at you. So that's one of the ironies of doing business in Africa. So those that actually need the capital for some reasons, and of course you can't blame even the investors or the banks. I mean, they want a track record. They want to be sure that their capital, is safe. And of course, when you're a big company, they've seen the track record and you stand a better chance of repaying the debts, and of course, whether it's even capital on equity basis. And on that note, I want to say a very, very big thank you to the panel that has joined me this morning. Professor Peter Kwate from Ghana, Charles Robertson, I believe you're in London. Well, you could be in Moscow or somewhere, but I like to think you're in London this morning. Thank you so very much. And of course, Ben Lewin Jones, who has joined me here physically this morning. Would you please give them a round of applause? Thank you so very much.
Thank you.
So let me also, as one of the organizers of this program, let me just also say this morning before I hand over to the MCs that yesterday we had our opening ceremony, and the governor of the Lagos State governor was here, and we had our partners, some of our partners, that's Dr. Akindele Akintoye, and of course Mohammed Dawish of IHS. Very, very grateful to them. But yesterday we did not have Von Kennedy in our midst yesterday, but we have him here this morning. Please, let me give him a round of applause. Von Kennedy is the CEO of Alluvia Agriculture Company. And please join us on the, please come, let's take a photograph together. Thank you. Where are our photographers? Yeah.
Let's clap one more time for that very wonderful panel. And thank you, Dr. Ogo Okiti, Managing Director of Business Day, for moderating that. I think that was quite insightful and gave everybody practical ideas on how to really scale, how to invest. I really did enjoy the conversation about the fact that SMEs lack affordable finance, and I really hope that over the years and with time to come, that will change. Because we always say SMEs are the bedrock of society, but we don't really treat them in that way. So my hope is that that improves. So I hope that you're all having a great morning. I know that it's going to be a very exciting day. For those of you who don't know me, my name is Lele Balde, and I'm the editor of the Business Day Weekender. It's a pleasure to be with you this morning. Our next panel is a very exciting topic. It's on agriculture and essentially how Africa can feed itself and the rest of the world. Please allow me to introduce Dimieri Von Kemedi, who is the CEO of Alluvial Agriculture. Please kindly put your hands together for him again as he approaches the stage to give us a presentation on how Africa and essentially Nigeria can feed itself and the rest of the world, essentially exploring the agriculture value chains in many ways. So please kindly come to the podium as you give your presentation, and then we will invite our other speakers to join the panel. So thank you very much, sir.
Thank you very much. I will just, on this topic, touch on some of the key things that we need to be looking at if we need to feed ourselves, let alone feed the rest of the world. At the moment, we all know that it is the rest of the world that feeds Africa, in spite of our young and large population, as well as the fact that incomes here are higher. Normally, those who earn less should be the ones that are more productive to feed those who earn more. But in this case, the reverse is what we see. Now, one of the things that we really need to do is to have less people involved in farming. But what we hear is everybody says more people, more young people need to go into farming. That will not increase our productivity. Burundi, for instance, has one of the highest proportions of populations involved in primary agriculture, and they are about one of the least productive in the world. Whereas the most productive countries in agriculture are those that have between 5 and 15% of their population involved in primary agriculture. So we have got to use more technology. We have got to be more knowledge-based in our approach to agriculture. Talking about knowledge-based, I'll give you an example. You might say application of fertilizer for rice production should be 2 bags of NPK, 4 bags of NPK, 2 bags of urea. But did you find out what was already in the soil before you started determining what needs to go back into that same soil? So you've got to figure this out field by field. It cannot be a general formula for the whole country. How flat is the land? So if you have a very uneven land, what you'll find is that even when you have applied the right proportion of your agrochemicals or your fertilizers, they will gather in the lowest portions of the land that they can find. And what will then happen is that there are many portions of the land where your chemicals and all of that will be inactive. In 2020, I went to a couple of communities in Niger State to prepare for dry season farming. And it was very interesting. You know, we all talk about climate smart agriculture, and we think that that's some kind of knowledge that will come from research institutions to the villages. But the people in the villages already understand. They were telling me that if they have their way, they will not plant in the rainy season. They will plant only in the dry season, because they figured out that during the dry season, they have more control over the water, whereas during the rainy season, they do more prayers. So you've got to be able to make sure that at the field level, you are working with knowledge, you are working with science, and you are working with mechanization. Now, people will then ask, if all these people move out of agriculture, what's going to employ people? What will employ people you can find at tin can? If you go to Apapa, just open all the containers, make a list of the things in those containers, and find a way of producing those things here, those will employ a lot more people than agriculture would, and agriculture will be more productive if you have less people doing it using technology. So I've touched a bit on just farm level agriculture. Agriculture is much more complex than that. I have a friend who says that agriculture is more complex than rocket science. And that is true, but I will not go into the details of how that is so. So at the field level, you have all these things you have to deal with to get it right so that you are more productive. But I'll just touch on just one more issue at the field level, then I'll go to a few of the other levels. Now, I don't know whether anybody here can guess the percentage of land under irrigation in Africa. Can anybody help with that? Oh, you tried. It's 5%. Does anybody want to guess about India? It's 52%. So when you have a situation where 95% of farming in sub-Saharan Africa is done once a year, and you want to compete with another place where they do it at least 2 or 3 times a year, you can begin to see the kind of challenges you'll be having with productivity and competition. They do 2 times, you do once. Moreover, I just explained how the farmers in Niger State told me that they make more, they reach more yields in the dry season than they can ever reach in the rainy season. So these people are having planting under irrigation twice a year or maybe 3 times a year, and we predominantly are waiting for the rain. Now you might ask why dry season farming will be more productive than rainy season farming. You know, sometimes when you plant, most times when you plant, you are told that after 2 or 3 weeks, apply this or that. So after 2 or 3 weeks, time to apply. Water is the main agent of circulating whatever you're applying. But you are waiting for the rain. What do? If it doesn't rain, you either decide to apply, you are wasting your application, or you don't apply, it means that whatever benefits of application you will not meet. So we need to irrigate more. I don't even want to go into the issue of infrastructure. A few weeks ago, some of my team members visited a community in Adamawa State where we are planning a project, and it was just unbelievable, the state of the roads. So what do we spend a lot of our money on? Logistics. Cost of logistics in Africa is about 10 times more than elsewhere in the world. Who pays for that? The consumer at the end of the day. In our discussions about agriculture, we talk a lot about farmers. Farmers are not the most important element in agriculture. The most important is the consumer, because the consumer pays all the people down the line. And if we are not efficient all the way to the consumer, from the farmer that is just one element, to the transporters that's another element, to the processors. Now come to the processors. Can we guess what the average capacity utilization of a rice mill is in Nigeria? It's low. So we spend all this money establishing all these processing facilities, and they are all operating at lower than the capacity utilization. Now, full capacity utilization of a rice mill, if it is fully utilized, that mill can repay itself in just about 2 years. That's how lucrative milling is. You know, it's the only thing that I can think about that is more profitable is if you get this real license from the CBN that allows you directly to print your own money. It's the only thing that is more profitable. Yet you see a lot of rice mills really struggling. They are struggling because of low access to the products they need to process, high cost of logistics. Sometimes they just decide not to mill, because when they look at the cost of the paddy is so expensive, it has no relationship with cost of production. So when they look at that and they look at what they will spend, say for instance 800,000 naira just to move 30 tons of rice from Adamawa to Anambra State. They look at it and they look at how much rice is sold for at the market. Of course, a lot of that is influenced by the importation, whether legal or illegal. It's very tough. It's a very tough business out there. So these are the things we have to look at. The last panel talked a little bit about cost of funds and access to funds. And the managing director of Business Day mentioned at the concluding end how when you need money, it's difficult to find the money. When you've got to that stage in the business, expand from there. So when we have businesses doing well, and by businesses I mean from the farmers to the logistics service providers to the processors to the distributors, if everybody does well, then obviously the economy of the country will do well, and then we'll be in a very good position to be self-sufficient in food production and then even to export. They are coming for the mic. Thank you.
Thank you so very much for that very insightful conversation. I know that you're going to continue the panel, so you may have a seat. You may have a seat on the stage. Let's put our hands together for Demiri Van Kemedy, CEO of Alluvial Agriculture. Thank you for that very insightful presentation, sir, and we look forward to the panel. Please kindly allow me to introduce the moderator for the next session on agriculture and feeding Africa and the world. His name is Caleb Ojewale. He's the assistant editor at Business Day Media, so please kindly put your hands together for him as he approaches the stage. Caleb, the stage is yours, and best of luck with your panel session.
Good morning, everyone. So to complete our panel this morning, we have Ade Adefeko, the Vice President, Government and Corporate Relations at Olam Nigeria. So if you could please join us on the stage.
Caleb, before you start, just to mention to this panelists, you can use your mics, and if you just press them, they're working. Thank you.
Okay. So just to get right into our panel, we've already had a bit of an extended intro from Vaughn already. So we are talking about feeding Africa this morning, and the topic is on agriculture, which is probably my favorite topic because people think I love food. So this is right down my alley. And so now let's start with you, Ade. So we've heard from Vaughn already. And looking at Africa and food security, a lot is often said about how there's a lot of inefficiency, which in turn leads to how much food is finally available to people on the continent. But I would like you to just take us through, from your own understanding, a bit. If you were to be given a State of the Nation address on the state of food security in Africa in 3 minutes, just share with us what your thoughts are on how competent are we in feeding ourselves and what are the key dynamics we need to note.
Thank you very much, Caleb. Good morning, everyone, and thank you. I think I'll probably use this mic. Hello. Good morning, all, and thank you very much for having me. Vaughn had already set the marker. He laid the marker, as it were. Though I don't agree with him on all spheres, but I will agree with him to an extent. I will say to a large extent, Africa can feed itself. And I'll say Africa can feed itself primarily if we can do business with ourselves. A lot of the business we don't do with ourselves, which is why I'm quite impressed with the ACFTA, talking about feeding 1.2 billion people. We all have comparative advantages in different agricultural products, which we must bring to bear, okay? So if we do not bring that to bear, then, I mean, it's futile trying to complain all the time and blame, supposedly, the West for all our problems, as it were. So for me, I will say that primarily we can feed ourselves if we do more business with ourselves, okay? Let's move food around the continent, primarily. Secondly, I mean, we always talk about all the time the challenges. Let's look at the opportunities. The opportunities abound. The problem we have in Africa is that no one wants to go long term by putting his money where his mouth is. Everybody is seeking for that next contract. Nobody wants to go into agriculture or agribusiness, like I like to call it. Because, you know, it's no longer farming or agriculture now, it's agribusiness. It's now a business. And we need to take that very seriously. Okay? In Africa, primary products, call it yam, cassava, cocoyam, potato, both sweet and Irish. In Nigeria, for example, we're major producers of these foodstuffs. But what we do not do is to add value to them, okay? Are we doing badly in Nigeria, food-wise? I wouldn't say we are. Can we do better? Of course we can. What do we need to do? We need to harness this potential we've been talking about in the last 30, 40 years. Everyone talks about our potential. How do we realize our potential? I'm one of those who believe government has no business in business, okay? But at the same time, government should enable. Caleb was speaking to me about giving a State of the Nation address. I'm not a politician, so I won't give you any State of the Nation address. I will just give you a few nuggets from my end. I mean, look at an example of my company, which is Olam. Olam has been in Nigeria now for about 33 years. So we are from farm to fork, okay? We started with cashew. But after a while, we said to ourselves, we need to backwardly integrate, add value. Because just exporting primary products won't help anyone. There's no point you exporting cocoa to Holland, okay, or to the States, for them to now start sending back to you Mars, chocolate, and the likes, all other cocoa derivatives. So what you need to do is to add value to make sure that that premium that is attached to the price of chocolate, you equally get it when you've added value from here. Very important. We can go on with the likes of sesame. We can go on with the likes of cashew. I mean, I'm sure a lot of you heard recently about what happened in Guinea-Bissau yesterday. Successful or unsuccessful, I'm not quite sure what happened on the political side. Guinea-Bissau is a country of under 2 million people, right? They are the third or fourth largest producer of cashew in Africa. Good quality cashew, for example. But, you know, Ken spoke about something. He spoke about logistics. Everything we do is based on what? Logistics. Who was that famous young man who was he on Big Brother? Who says everything is based on what? Logistics, which is true. How did I get here? Logistics. Phone calls, logistics. How do I fly out of here? Logistics. So logistics is everything. But when you have poor infrastructure, you need to sort that out. I've spoken at different fora that what we need to do is to take care of, first, our infrastructure. Two, our research institutes need to do more. At Independence, we had nothing less than 30 or 35 or 40 research institutes who are coming up with, you know, the best of the best and have the best of the best from the academia. But right now, what do you have? You probably have 10 or 15 who just collect grants. Those grants are used for what? Recurrent expenditure. Or at best, under the guise of capacity building or going for capacity building programs, they go abroad and come back. That is not impacting on the farmer who needs to improve his yield. Yield improvement in Africa needs to be harnessed and to be increased. I'll go further as we move along. But what I'm saying here is that Africa can feed itself. Let's not be delusional here. Africa can feed itself. What we need to do, and I've said it again at one or two other fora, is a palate change. Palate change. Some of the things we are used to, that we think we must eat all the time, there are derivatives from some of those products that we can eat. And that helps in terms of, you can speak to the food security people, they will tell you, or the food fortification people, they still have the nutrients and everything that you seek. Thank you.
Thank you very much
for those insights you've shared with us. And just to go on with our thoughts you've shared on Africa Can Feed Itself, and you've mentioned two things: the need to improve the yield, and then you mentioned logistics earlier, which would deliver what you've produced. I would like to go to Vaughn now, talking about this yield. From the work you've done, you're working in some other African countries and not just Nigeria, from the interactions we've had previously. So let's take a forward look at this, a forward-looking approach. So if we are to improve this yield, as Ade has mentioned, and referencing the research institutes that are not doing probably as much as we expect from them, and he has given an example of Guinea-Bissau, where they have a 2 million population thereabout, but they produce a lot in cashew. And there are other countries where they don't have as much population as Nigeria, but they are producing more. So from the work you have been doing, what do you think we can learn from where it works and adopt that in improving our own yields and productivity in Nigeria?
Thank you. So with respect to improvement in yield and productivity, of course, by the time the farmer goes to site to start the process, a lot of things have already been determined. If your seed has a particular potential, so once you start with that seed, there's a limitation of potential attached to that particular seed. And Ade was talking about the research institutions. To some extent, they are also a product of funding, right? If industry is doing very well, Alluvial, Olam can fund them to work. So as we continue this trend of larger agricultural companies, there will become more surplus to invest in these research institutions. But in the meantime, I see some policy disconnects. It's very difficult to import seeds, whereas it's actually easier for you to make those improvements by being able to import seeds instead of importing the finished rice or maize or something. So we need to look at things like that. We need to reduce our cost of production. To the best of my knowledge, there are not many companies in Nigeria or even other African countries that manufacture insecticides, herbicides, and things like that. We need to really reduce the cost of production, because in the end, the consumer is our focus. It's not about the farmers. The consumer is the focus. So we need to look at that. The irrigation infrastructure, a lot of that needs to improve, and I'm aware that the AFDB is really looking at that. And if you travel all over Africa, you see one interesting thing is you see some commonalities and you wonder whether this was planned from a central point. And indeed, the answer is yes. These will be World Bank projects or AFDB projects that were started in the 1960s and 70s. So you go to some places and you see vast lands that have been already cleared. You see some irrigation infrastructure by way of canals, but the pumps are no longer there. And often you find that smallholder farmers have brought their 3-inch pumps in, and they are directly pumping water from the ground, using groundwater to do irrigation. But previously, there would have been a large-scale irrigation program in that particular place. Thank you.
Thank you very much. Okay, I think this works now. So great. Ade mentioned something earlier referencing logistics. I'm sure that was probably Efe that mentioned that, although I'll deny I know anything about Big Brother Nigeria after this program. But talking about logistics, during the COVID era, say 2020, when we had the lockdowns, we also had challenges in terms of moving agricultural products across Nigeria. We had farmers who couldn't get inputs. We had those who had produced and couldn't bring them. There were those who couldn't even harvest from their farms. And it kind of showed there wasn't so much of a deliberate thought given to the fact that even when people are sick, they still need to eat if the medicines will work. So do you think there's a way we could have approached that as a country to have probably making this a national emergency of sorts, giving it a priority, that whenever you are even shutting down the country, there are some things you don't tamper with, otherwise things will go worse. What were your own experiences as a company during that period? How did you overcome them? And what lessons do you think we can learn from that going forward?
Thank you. What every country does, and if you go across climes, particularly in the Western countries, is everyone has what you call a strategic reserve. So you have silos where you have food, grains particularly, where you store them. Grains that can last you 1-2 years sometimes. Strategic grain reserve or silos. But here, for example, we have silos which were concession to the wrong people who had silos and couldn't do much with it, and were now auctioning, or technically speaking, hawking their silos. So why do you in quote, concession silos to people you know don't have the wherewithal to take care of it? So for us at Olam, for example, don't forget that, like I said, we are from farm to fork. We move upstream, downstream, midstream. So to a large extent, we have farmers who we empower, who produce for us, and we have them in warehouses across the geopolitical zones. So don't forget we're pan-Nigeria. So for us, we're able to overcome that challenge to a large extent. Okay? But again, the agencies of government that were more or less stumbling blocks, who at every point in time became stumbling blocks at different sections of you bringing the food from the farm to the gate. Well, we had to impress upon the agencies of government to allow that to happen. And to a large extent, yes, they were. But you see, you need to understand that you cannot, the large behemoths like the Olams and the Alluvials and the big companies who offtake from the farmers, okay? That's what I think it's important, which is why I've always believed that the likes of Olams of this world, flour mills of this world, shouldn't have farms of their own. They should support agribusinesses or farmers with inputs, with microfinancing, okay, and offtake from them. So to a large extent, logistically, we were not really affected to a large extent. Because of course, don't forget that again, that we're a big company. So, but you cannot say the same for the others. But again, you need to understand again, in the whole value chain of production, what gets produced at the farm gate, for example, 60-70% of that rots because of what? Because of storage issues. Particularly, look at legumes and vegetables, for example. You don't have too much of cold storage across the country. So people need to look for the niches, okay, and invest in those areas. You cannot be everything to everybody. So choose one part of the value chain and invest in it. So I'm one who believes that some of these intervention funds that are being provided, which I believe should be provided in conjunction with the Ministry of Agriculture. But again, like I said again, and I always say, if there's a lacuna, okay, if there's a lacuna in the Ministry of Agriculture, somebody has to step in. So if the person stepping in has stepped in because there's a lacuna, you can't blame that person for doing that. So I think there should be collaboration to a large extent with Ministry of Agriculture, the major players, to come up with something along the lines that will take care of this logistics, particularly storage and cold rooms for a lot of these products. Look at an example. When you are traveling across the country, you are driving through, and you stop by the local, no, I won't call them local markets. No, they are more or less roadside markets. You find out that the cost of what you buy ordinarily in Lagos, which probably will cost you 5 naira, will cost you 1 naira from there. So if you have a large booth, you store X, you store Y, and you take it back home. Okay? So you need to understand what is inhibiting the producer who has brought it to that point, and from that point has not gotten to from the hinterland to the city center. One thing government has done to a large extent here is the railways, okay? But you find out that the railways are always one way. Either they are taking the produce to the place, or they're bringing the produce from the place. So it's not a two-way street, it's always a one-way street. And we need to work on that mismatch. Look at the ports. Whether you like it or not, the ports to a large extent, is on the federal government list. I don't know what they call it, concurrent list. Exclusive list. They call it the exclusive list. So all those things we need to look at. I mean, you have look at a country like Comoros. Is it not Comoros? Djibouti. Djibouti have a port which is dedicated, a port and a train facility that is dedicated to only the production for meat movement from across Ethiopia and that belt. And for them, they've looked at the comparative advantage in that area, and they've latched onto it. So we need to look at our comparative advantage and latch onto it. We do a lot of talking, but we don't do too much of doing. So we should stop being talkers. We should now become doers. That's what
Thank you very much.
That's my take.
Thank you very much for that. And on being doers and being less of talkers, Vaughn, I'm aware you're into providing some of these farmers with the inputs and the funding that you referenced earlier. So I would like to hear from you. So we have the government on one hand that has its own intervention programs that it does for the farmers, and you have your own from a private sector driven angle that you're also doing. From your experience, what do you think works best in terms of providing farmers with funding and input that the public sector side probably doesn't get right?
Okay, so I think both the public sector and the private sector have a common challenge. And indeed, actually, there is no public sector as such, because even all of the CBN interventions are done through the private sector and, of course, the commodity associations. So, to some extent, the commodity associations are not as private. They are closer to the public sector than to the private sector because of the way they are structured, and also because of the way the farmers perceive them. The farmers perceive commodity associations as extensions of the public sector. But regardless, there is, I mentioned earlier that there are several elements involved in agriculture, and the psychological side of how farmers see intervention is perhaps a very significant barrier to funding, to continuous funding and sustainability of the farmers' work themselves. So we all have a responsibility to work hard at it, to bring the farmers on the same page as the financiers. Nobody will put their money somewhere that they fear the money will not come back. Yet there are very major instances of challenges in repayment. In many cases, farmers start with the very assumption that they do not need to repay. And then in other cases, they have some challenges along the way that we must work with them to address so as to improve their repayment capability. Once farmers are repaying, then it becomes easier to raise the funds to support farmers, and it's also then easier to expand. So that's something that we all have to invest time and resources in understanding the challenges of repayment. I believe that once we get that right, our productivity will be significantly enhanced, because funds that come in will be utilized, the funds will grow, and we will do better. Thank you.
Okay, and okay, yes, please.
As an addendum to what he spoke to, a lot of the farmers or the cooperatives or those that receive the intervention funds think it's their own part of the national cake, unfortunately. Okay? But why it's important to always make sure that you go through a process in giving it to them through, the likes of companies like ours, is that you have cooperatives you already work with. We have cooperatives for rice, for example, about 20,000 of them, who we advance those kind of monies to. And you can't advance those monies unless you have to advance it through a bank anyway. Okay? The bank is the conduit. And you make sure you handhold them to a large extent in helping to improve. I mean, the yields we do now with Faro 44 is about 10, 10 tons per hectare. That's not particularly bad. I mean, it can be better. But, with Faro 44, that variant and the variety that we use we're the largest single investor in the rice value chain, $140 million in that value chain. But in spite of that, we still produce only 10 to 12% of Nigeria's rice needs. Nigeria consumes on average around about 7 million tons of rice. I think right now we've probably inched up to around about 4 million tons or thereabout, okay? And 4 million max, maybe 5 million tons, and we'll have a gap of about 2 million tons. Have we made progress? Yes. Have we made progress geometrically? No. Arithmetically? Yes. But are we doing badly? I don't think so. Can we do better? I think we can. But you know what? We need to progress. And again, another thing I need to speak to is the fallacy that we need to have rice mills all over the place. Don't get me wrong. Rice mill is the hardware. The main thing you need is the paddy. If you don't have the paddy, what are you processing? What are you milling? And one spoke to the prices of paddy. The price of paddy is astronomical, okay? It's an important element, but there are other elements to the production cycle. But again, it's not enough to have rice mills left, right, and center, which is the hardware. What we need is the paddy. And what we need again is for the paddy prices to be affordable, and to be affordable all year round. Very important.
Thank you very much. And my next question, we have two more questions and then we take questions from the audience and online. Now, this question actually ties into what you've just said. So we don't need to have mills left and right, we need more paddy. So in the same vein, peasantry or peasant farming, which seems to be preferred by the government, not just the current one, but even previous ones. Probably if out of 200 million, if 150 of us are farming, it's assumed we'll be able to produce more food. So I wanted to speak in terms of the efficiency of this. If Africa will feed itself, if Africa will become competitive in food production, and thinking about this not just in terms of the rice that you are going to finally boil, but also the fact that the crop from the farm would go into industrial processes for a range of other things, and not even just the consumables, even down to cotton that could make even some of this fabric. So to what extent should we still be emphasizing peasantry or peasant farming, and how further will it take us in achieving food security and industrial competitiveness in Africa? So let's start with Von on that, please.
Well, the Olam farm is probably the largest farm that I've seen in Nigeria and many of the other countries that we are operating in. Yet in comparison to the global average, that's not a very large farm. So what we found is that commercial agriculture has a significant challenge in sub-Saharan Africa. And if you ask me what is the challenge, I will say that I would not use my money to find out what that challenge is. So
recording in progress.
Since they were not recording. So we have all found that a very significant percentage of food produced in Africa is produced by smallholder farmers, which is why everybody just thought the best thing to do is just strengthen those people who we already see are producing the most significant. Don't go and do experiments, right? So that is what is really responsible for the focus on smallholder farming, which you refer to as peasant farming. The interesting thing is that the average smallholder farmer is very profitable. I think it costs just around, even with the highest cost of production estimates, it will cost 300,000 naira to cultivate 1 hectare of rice. Now, even at the conservative 3 tons per hectare, they shouldn't be doing 3 tons per hectare. They should do double that or more. But even if they did 3 tons per hectare, at 200,000 naira per ton, with these high paddy prices, they're already making 600,000. So they are doubling their investments there are not many similar investments, except, of course, the pyramid schemes. But real investment is difficult to make that kind of profit. The problem, however, is that if you divide their profit of 300,000 naira by 12, it becomes a not so significant sum, when you begin to look at what a family needs to manage. So you have a family of one wife and one husband at the very limit, 3 children, 300,000 naira for the whole year, school fees, health bills. And these are also the very challenges that are competing with the repayment, right? They have 600,000 in their hands. They have to pay back 300,000, and they are seeing that the remaining 300,000 may be not enough. So all these things are things we have to look into, and we have to address this assumption that a farmer cannot do more than 1 hectare, and therefore we have to pin them down to only 1 hectare. Most of the major intervention programs insist on 1 hectare per farmer. 1 hectare per farmer if they will use hoes and crude instruments. Today's farmer, educated or not, is now a project manager. It's no longer that type of farmer. Her job is to go to the farm and check what the tractor operator is doing, whether the plow has been properly done, all of that. So most of these things this is now project management. So 10 hectares, 20 hectares is no big deal for a smallholder farmer to manage. Do you think anybody will, one of the most difficult things to do is to do business with someone who has nothing to lose. But if you see this smallholder farmer now has 10 hectares, so the 300,000 naira we are talking about now becomes 3 million naira. Many people in Lagos don't make 3 million naira a year. So at that point, you find a very, very responsible counterparty to deal with. She would never jeopardize that business. So farming is very profitable, but not at this tiny scale. And even 10 hectares is still peasant. It's still a smallholder farming. And like I mentioned earlier, there are many other things that are more productive than farming. Take, for example, I was in Niger State, and in the house of the chief, I saw that the daughter had a sewing machine. And I asked the chief if he knew that the sewing machine is more productive than 1 hectare of land. He couldn't believe it. But I think we all know that one sewing machine is more productive. In a year, the single sewing machine will make a lot more money than 1 hectare of land, no matter how a hectare of land looks like. And of course, we all know how many things we are importing into the country. All of those things can be produced here. Cotton, for instance, employs more people than rice, as an example, because of the various channels in that value chain.
No, so you can, the same question in just a minute or two to round up.
Well, I think a lot of the peasant farmers or the smallholder farmers need hand-holding. And I think we need to rethink the intervention programs we have by looking at it, the whole gamut, okay, and understanding it properly. The large behemoths will do what they can do, but don't forget that the large behemoths are equally in business to make profits, okay? And will try the best they can to make sure that, they help increase yield. And he once spoke to something. There are many, many other aspects to it, okay? But if we want to really, really be serious about agriculture and agribusiness, we need to support a lot of the smallholder farmers and most just encourage them to organize themselves into cooperatives. So when you're dealing with a collective, it's easier than dealing with individuals or small farmers here and there. And another thing I need to speak to, which we probably don't talk about. I mean, in the coffee value chain in Africa, we're at the lower rung, okay? In the tea value chain, we're on the lower rung. But we have a belt in the country, the Adamawa and Taraba belt, for example, will give you the best of teas and coffee. But you know what? Everybody blames the center, but no one speaks to the subnationals. The subnationals need to be interrogated as well. Not all your problems sit at the center. Some of your problems are with the subnationals. Query your subnational leaders rather than all the time putting the blame at the center. Another nugget from me. Thank you.
Thank you very much. And we have just a minute to go. I wish we were able to take questions. If we could probably take one online, one or two online if we have any. Do we have any questions online? Okay, so we'll just take the first two. What is the plan for coping with constant climate changes with regards to harsh weather conditions and irrigation? So, Vaughn, you can take that. Then the second one, how has your organization been able to solve the challenge of sustainability, considering the changes that have recently affected the global economy? So, Ade, you take that. So, Vaughn, in a minute, please.
Yeah, thank you very much. I'll make it shorter than a minute. Irrigation is one. I think the person himself has mentioned irrigation. Yes, so irrigation is a very important response to climate change, and also drought-resistant varieties of seeds that require less water. And then sometimes people need to change what they plant. If you've been planting things that require a lot of water, you need to look at things that don't require too much water.
Next question.
Yes, sustainability should be at the core of any business, particularly in agriculture, because while doing business in a sustainable way, you're more effective and you're more efficient. And that, I think, should be at the core. We have had different issues across the whole value chain in terms of, climate smart agriculture and the likes. But sustainability should be one of the key elements of any business, particularly agriculture, as it affects us. Thank you.
Thank you very much. A round of applause. Oh, we have some hands up. How many can we take? Okay, so we can take one question from the audience.
You should direct me. You want me to use my discretion?
Yes, be the bad cop.
Okay. I will just go with the person in front, if you do not mind. Apologies.
Thank you very much. First of all, let me apologize for coming in late. Exactly. I am Mohamed Ahmed Kwantagora. I'm the President, National Shea Butter Association of Nigeria. I came in National Shea Product Association of Nigeria. Well, I just want to comment on what actually is happening out there in the field. Just to share a little experience. I know you have a lot of experience, but I want you to take one keynote. I'm actually the pioneer chairman of the Niger State Anko Borough program. So we did the rice, cotton, and soybeans. One thing that is happening from what I have seen, out there, we don't treat agriculture as a business. We see it more of a developmental thing to intervene and support the people at the grassroots to produce. We've not been addressing the issues across the entire value chain. So we need to take that into consideration. Number two, on the part of the farmers, you find that a farmer with 1 hectare farmland or 2 will be involved into so many programs because it is being seen as a developmental thing. He will be in ANCO, he will be in IFAD value chain, he will be on all kinds of programs. So the issue of repayment is always an issue. So we need to take that into consideration. There is not much time, but if you don't mind, let my colleague also add on or two things.
No, please, because of time, we are pressed for time. So we actually want to take 2 more questions, but let's spread it across the hall, please. So the question, so straight to the point, and just, if you have a question, just straight to the point so we can direct.
Are we taking another one?
Yes.
Oh, yes. Sorry, I didn't realize that.
Good morning, my name is Chuka. I'm BDM for NISI. I'd like to ask about food security, in the line of food security. So we dealt with a lot of issues concerning cultivation of crops, right? So I'm going this other way. Developing local breeds of animals, because this is a main protein source. So are we interested as a nation to develop our local breeds in aspects that concern things like milk production, meat production, improved meat production? Yes, this is exactly what I just want to learn. Thank you.
Okay, thank you. So let's have one more question at the back. We've had two from the front, so one more at the back, then we get the responses to those questions.
It'd be great to get a question from a woman. A lot of men are asking questions, which is great.
That would be great if we can have a female.
Yeah, I guess not. Maybe for the next
takers.
panel.
Oh, sorry.
Oh, we have one from a...
Hello, thank you.
Just
Agre
state the
Emmanuel
question,
Ismail.
please. Your name, your organization, and the question.
Thank you. Agre Emmanuel, you don't just my name, from Edo State. Ajo Cash, a digital bank platform that actually offers finances to farmers. My question is this. I wouldn't want to believe that the only issue farmers are having is the issue of access to money. The biggest challenges I have seen from what we have done with some farmers in my area is the issue of security. We have had to give money to some farmers, and then it got to time of harvest, they couldn't go to their farms. They couldn't get, in fact, it took us 4 months to get money for 12 months. And I think that's a big issue. So what is Alluvia and all I'm doing to probably collaborate with government or some other bodies to see that this issue of security is certainly being addressed? Thank you very much.
Thank you, and thank you for that question. And let's just take the last question
Is there
from
a female?
Yes.
Okay, great.
Good morning, everyone. My name is Chinwe Shen. My question is to alluvial agriculture. I'd like to know what you do. Like I have a small business and I process food. How can I work with you? I need to work with farmers. I don't have access to farmers. Is there a program that you do where I can benefit from your program?
Thank you.
Okay, great. Okay, so we have, I would say, 2 questions to Vaughn. So this last one, so essentially wants to leverage the network you have to support our business to grow. And then you could also take the bit about breeds. Okay, so you can both take the one on the breeds and then you also take the one on security. So, Vaughn.
Security, Okay, so, beans is a very important crop, not just because of the fact that it is rich in protein. The what? Oh, breeds. Okay, this is like that question they asked somebody about mineral resources in the States, and started mentioning Fanta and Coca-Cola. So I'm sorry, I'm going to pass that because I didn't. Oh, no, please, can you get up? Yeah, so please discuss with her. We are very keen to working with women and women organizations. That's top in our priority.
Yeah, thank you. The gentleman who asked questions about breed. Coincidentally, I'm the Honorary Consul of Botswana to Nigeria in Lagos. And for those who don't know, Botswana is the largest producer of beef on the continent. Okay, the #1 on the continent. And I mean, I just got back from Botswana as well, and I was joking with them and telling them that if Nigeria decides to import all the beef from Botswana, there will be no beef left for them, because they're a country of 2.3 million people, okay? So if we take all the beef from Botswana and bring into Nigeria and send to the major hotels in Nigeria, Botswana will have no beef left. That's in a lighter mood. But again, what you spoke to is important. I think what we can do is to bring the experts to inseminate some of our cattle here, okay, and have crossbreeds, okay, in which we can improve. Rather than us importing beef straight from Botswana, we have experts from there come in here, inseminate our cattle, okay, and have crossbreeds, okay, and we look for the best of the best, as it were. So that's I think an easier and a simpler way of doing that.
Security.
Security. Well, I think it's a joke when people say, I mean, but we must take it seriously. When everyone says every company is its own government, as it were. you provide your own water, light, security, and all that. We've been very privileged. Don't forget that we have an animal feed plant in Kaduna, okay, on the Kaduna-Abuja Expressway. That area, banditry is rife. But in consultation with the federal government and the state government, we have a system where they support us by bringing in security to help us in that area to a large extent. And ditto for Nasarawa, where we have our rice farm. So for us, I wouldn't say security is an issue. But that being said, doesn't mean it's not an issue for others. So we are just one of the few who, because of the quantum of what we produce, government has said, you know what, let us support here with security. But insecurity is an issue.
Thank you very much. And a round of applause.
Just touch a little bit on security. I understand what the gentleman was saying. Security is a big issue, but let us see what is happening in the country now as a battle between prosperity and insecurity. So if you move away from your area of production because of insecurity, there will be even more insecurity. So insecurity will occupy that space and use that as a base to move to the next space that is relatively more prosperous and secure. So of course, insurance needs to look at what to do about insecurity, but we must not abandon the people in insecure areas. We must work everywhere. Thank you.
Thank you very much. And a round of applause for our panelists. Thank you very much, Ade Adefeko, the Vice President, Government and Corporate Relations at Olam Nigeria, and Von Kemedi, the MD CEO of Alluvial Agriculture. Thank you for the insights.
Thank you so much.
Can we please have all the panelists and
Dr. Kitty, please.
The Managing Director of Business Day to please join the stage for a picture. We need you on stage for a picture, please. Let's put our hands together once more for that very amazing panel session. Caleb, well done. That was really great. Congratulations. I'm glad to see that this panel was very engaging, and that I think agriculture is one of those topics that cannot be spoken about enough, and I look forward to the day that Africa indeed feeds itself. I think what I got from that panel is that logistics are extremely important based on logistics, and Africa will be able to feed itself one day, and hopefully that day will come soon. So we have a quick 10-minute presentation coming up, and then we will go into a tea break. So please allow me to introduce His Excellency Dr. Benson A. Bana, who is the High Commissioner of the United Republic of Tanzania here in Nigeria, based in Abuja. He will be giving a presentation entitled The State of Tanzania and Africa's Recovery. Please kindly put your hands together for His Excellency Dr. Benson A. Bana, who is the High Commissioner of the United Republic of Tanzania in Abuja, Nigeria. Please keep the claps going as he's coming onto the stage, and make him feel welcome as he gives us his presentation. Thank you. You can remove your mask. Thank you.
Good morning. With your indulgence, I pray to stand on existing protocols. Let me first start by thanking the organizer of this August event for bringing us together to exchange knowledge, to share experiences from the eastern part of Africa to the western part of Africa. I thank you very much for this kind of thinking, for this kind of gathering. I must also thank the guest of honor yesterday, His Excellency Babajide Sanwo-Olu, the Executive Governor of Lagos, for his very inspiring opening remarks, which at least helped us to be in the line of thinking that is instrumental for recovering from the effects that COVID-19 has imposed on the mother world. Let me also thank the previous speakers since yesterday for enlightening us on very many important issues that are affecting the world today and Africa in particular. Their remarks, their contribution presentations were very insightful to guide the world and Africa on the next steps as we recover from the adverse effects of COVID-19. I was invited, and actually I volunteered to speak on the state of Tanzania and the Africa recovery. I'm not sure whether what I'm going to talk about will be in line with what you want to hear, but I have learned a lot from the great brother of African countries, the people of Nigeria. You have always been our role model. You are our big brother. We learn much from Nigeria. I have been here for the last 2 years, but I have learned much. You have helped reshape the world, reclaim the African glory to the extent that we admire the contribution of people like Dr. Kinumi Adesina, the president of African Development Bank, Ikonjo Ewala, and the rest that are reshaping the world in terms of thinking and holding Africa at their heart. We thank Nigerians for what you do for the rest of Africa. Now, I propose to speak on 2-3 main issues. I try to present Tanzania at a glance. Some of you may not know Tanzania. Some of you may not have traveled to the eastern part of Africa. And secondly, I would like to also allude to the policy response to reposition Tanzanian economy in the advent of COVID-19. And lastly, we are pursuing what we refer to in diplomacy as economic diplomacy policy. So I've got my colleague with some of the opportunities that are available in Tanzania in terms of investment. Nigerians are endowed with capital, sufficient capital, and you have exported some to other African countries. So we tend to invite Nigerians to consider investing in Tanzania, as well as organizing tourism trips to Tanzania to discover what Tanzania has in terms of tourist attraction. And again, some of the important products that can enter into the Nigerian market. So my colleague will distribute some of the information related to the 3 aspects: trade, investment, and tourism. Let me start with my first point, Tanzania at a glance. Tanzania is in Eastern Africa. She has a population of about 60 million people. She is bordering 8 countries, out of which 6 countries are landlocked. So Tanzania is their gateway to the Indian Ocean. Tanzania became a middle-income country in July 2020, 5 years before the projected time, which was 2025. The economy is somewhat resilient, with relatively low inflation standing at around 3.2, and high economic growth standing at around 4.7%. The consequences of COVID-19 have not spared Tanzania as the country, but still Tanzania remains one of the 10 countries with the largest economy in Africa. Number 2, Tanzania is a member of regional bloc, the East African Community, with a population of around 162 million people. The SADC bloc, with a population of about 450 million people. And Tanzania is the home of Swahili language, which is our lingua franca. It is spoken by about 350 million people over the world, and it is taught in more than 58 universities across the globe. Generally, Tanzania pursues a non-alignment policies and it cherishes the value of peace, freedom, and unity. And it has preserved over time, over the period of 60 years, its independence with uninterrupted civilian rule and the constitution order. Nigeria is 1 year old when it comes to attaining independence than Tanzania. You attained independence in 1960, while Tanzania attained independence in 1961. But we have shared a lot. We have converged on a number of matters within the African continent and in the international scene. Tanzania has witnessed the peaceful changes at the presidential level. We have had 6 phases of government, and at the moment we are in the 6th phase, which is under the able leadership of the only African woman president, Her Excellency Samia Suluhu Hassan. She is a capable leader. She is championing the cause to recovery from COVID-19. And at the moment, she is the only African woman in the seat of the presidency. And broadly, she is a role model to all African women to vie for political seats in their jurisdictions. Like Nigeria, Tanzania is a member of the United Nations, a founding member of the African Union, and has already ratified the African Continental Free Trade Area Conventions and Protocols. She is a member of the Commonwealth, Non-Aligned Movement, and the other international organizations. So Nigeria and Tanzania, we share a lot in terms of values, in terms of history, and the aspirations. Now, what are the Tanzania's policy strategy for recovery, which we may want to share with our friends and brothers and sisters in the Federal Republic of Nigeria? Tanzania, like other countries, has been affected to some extent by the advent of COVID-19. However, the country is implementing a number of measures, policy measures, that are helping to overcome the adverse consequences of COVID-19. 1, Tanzania is pursuing, at the moment, the economic diplomacy strategy, which entails opening up the country for foreign direct investment as much as we can. The aim is to attract investors, promote bilateral relations that steer trade between Tanzania and other African countries, and promote intra-African trade and attracting people in tourism and the travel sector. As I speak, 4 prominent Nigerian companies have already invested in Tanzania, led by Dangote Group of Companies, which has a state-of-the-art cement factory in Tanzania. And we thank His Excellency Alhaji Aliko Dangote for choosing Tanzania as his investment destination. We have the Sahara Group. Actually, Dangote Group of Companies, I think the investment is worth more than $800 million as I speak. We also thank Sahara Group, who have invested largely on oil storage facilities, the facilities which are valued at more than $100 million. We thank Sahara Group for choosing Tanzania as their investment destination. We have UBA Bank, which has invested in Tanzania in the financial sector. And recently, I think it was October or November, His Excellency Elumelu paid a courtesy call on our president. Again, we have Grant Trust Bank, which has also invested GT Bank in the financial sector. We thank all of these for choosing Tanzania as their investment destination in the Eastern African region. At the same time, I take this opportunity to welcome business leaders, captains of industries, to consider investing in Tanzania. You are investing in Tanzania because Tanzania is relatively a peaceful country in Africa south of the Sahara. You invest in Tanzania because you can have access to the SADC market and the Eastern African market, a market of about 600 million people plus. Despite the advent of COVID-19, Tanzania has one-stop shop, the Tanzania Investment Center, which continues to register local and foreign investments in agriculture, in construction, in trade, in energy infrastructure, financial institutions, human resources, industries, and transportation. The number of new investments have been growing from time to time. Tanzania maintains a zero corruption tolerance policy, and she is on the road to a corruption-free society, as attested by Transparency International Corruption Perception Index 2021 report, which was released last week. So you invest in Tanzania, you are likely to reap the benefits of what a corrupt-free society generates. Tanzania is also open to investors from Nigeria and beyond, majorly in areas of automotive industry, pharmaceuticals, medical equipment, real estate, cane sugar production, car assembling, agricultural machinery, edible oils, agriculture and agro-processing, cotton and textile, blue economy, fishing and aquaculture, livestock and leather industry, mining and mineral processing, oil and gas, liquefied natural gas, and the tourism and leisure industry. The government policies provide the tax and non-tax incentives to investors. That is what we'll be providing to you to be able to consider informing your friends, prospective companies in Nigeria to consider investing in Tanzania. And the government of Tanzania is also keen to strengthen and deepen tourism and leisure activities, encouraging both domestic and international travelers to visit Tanzania's tourist attractions, including Mount Kilimanjaro, the highest mountain in Africa, Serengeti, Manyara, Ngorongoro, and the unique white beaches of Zanzibar. Tanzania has more than 20 national parks, including the famous Serengeti, Kilimanjaro, and Ngorongoro. It has a lot of tourist attractions. So we invite well-endowed Nigerians, when you have toiled a lot, when you have worked much for your country, to consider taking your leisure time to Tanzania to see what God granted to Tanzania in terms of flora and fauna. So I have much to say, but given the constraints of time, I better end up with one note that to recover from the pandemic needs committed leadership, political commitment, and deliberate efforts to invest in projects that propel economic growth and economic development. To that end, Tanzania has embarked in investing in several projects that propel the economy. And this includes the construction of standard gauge railway line, Mwalimu Julius Nyerere hydroelectric power. It has revived Air Tanzania Corporation. It had one plane in 2015. As I speak, we have 12 operating state-of-the-art aeroplanes, and we are expanding the Dar es Salaam port to be able to serve 6 other landlocked African countries, including Uganda, Rwanda, Burundi, DRC Congo, Zambia, and Malawi. And as I speak, yesterday, His Excellency President Kaguta Museveni and my Vice President, they signed an agreement that ushers in the implementation of the Uganda oil pipeline that will stretch from Hoima in Uganda all the way to Tanga Port along the Indian Ocean. So, as I started, once again, I thank the organizers of this August event, and I welcome you to Tanzania. I welcome you to the Tanzania High Commission in Abuja. Feel free to be my guest. Once again, thank you for this opportunity.
Thank you so very much, Your Excellency, Dr. Benson A. Bana, High Commissioner of, yes please, thank you. High Commissioner of the United Republic of Tanzania in Abuja, Nigeria. Let's please put our hands together for him once again. Tanzania is definitely a great destination to visit, and I hope that as we plan for our next trips to London or Dubai or the States, we perhaps consider going to Tanzania, because the thing is, if we as Africans start to travel within our continent, that actually helps grow our economies. So it's not every time Dubai. Thank you very much, His Excellency Dr. Benson A. Bana, High Commissioner of the United Republic of Tanzania in Abuja. So I really hope that everybody is enjoying their morning. So what we're going to do now is go into a tea break that will last 20 minutes. So we have to be back here by 11:43 a.m. And then we'll continue the program for then on. So thank you very much, and see you all in 20 minutes. The ushers will show everybody where you can go for your tea break. Thank you.
analysis that keeps you ahead of the competition and well positioned to take advantage of opportunities whenever they arise. Join our exclusive community of Business Day subscribers and receive unlimited access to our award-winning content on desktop, mobile, and tablet devices and get access to our daily e-paper. Visit www.businessday.ng/subscribe or email subscription@businessday.ng today to get started. In an increasingly changing and uncertain economy, how informed are you on the government policies, shifts in the business environment, or investment opportunities? At Business Day, we don't just inform you. In an increasingly changing and uncertain economy, how informed are you on the government policies, shifts in the business environment, or investment opportunities? At Business Day, we don't just inform you, we empower. In an increasingly changing and uncertain economy, how informed are you on the government policies, shifts in the business environment, or investment opportunities? At Business Day, we don't just inform you, we empower with intelligent insights and analysis that keeps you ahead of the competition and well positioned to take advantage of opportunities whenever they arise. Join our exclusive community of Business Day subscribers and receive unlimited access to our award-winning content on desktop, mobile, and tablet devices and get access to our daily e-paper. Visit www.businessday.ng. They arise. Join our exclusive community of Business Day subscribers and receive unlimited access to our award-winning content on desktop, mobile, and tablet devices and get access to our daily e-paper. Visit www.businessday.ng/subscribe or email subscription@businessday.ng today to get started. In an increasingly changing and uncertain economy, how informed are you on the government policies, shifts in the business environment, or investment opportunities? At Business Day, we don't just inform you, we empower with intelligent insights and analysis that keeps you ahead of the competition and well positioned to take advantage of opportunities whenever they arise. Join our exclusive community of Business Day subscribers and receive unlimited access to our award-winning content on desktop, mobile, and tablet devices and get access to our daily e-paper. Visit www.businessday.ng/subscribe or email subscription@businessday.ng today to get started. In an increasingly changing and uncertain economy, how informed are you on the government policies, shifts in the business environment, or investment opportunities? At Business Day, we don't just inform you, we empower with intelligent insights and analysis that keeps you ahead of the competition and well positioned to take advantage of opportunities whenever they arise. Join our exclusive community of Business Day subscribers and receive unlimited access to our award-winning content on desktop, mobile, and tablet devices and get access to our daily e-paper. Visit www.businessday.ng/subscribe or email subscription@businessday.ng today to get started. In an increasingly changing and uncertain economy, how informed are you on the government policies, shifts in the business environment, or investment opportunities? At Business Day, we don't just inform you, we empower with intelligent insights and analysis that keeps you ahead of the competition and well positioned to take advantage of opportunities whenever they arise. Join our exclusive community of Business Day subscribers and receive unlimited access to our award-winning content on desktop, mobile, and tablet devices and get access to our daily e-paper. Visit www.businessday.ng/subscribe or email subscription@businessday.ng today to get started. In an increasingly changing and uncertain economy, how informed are you on the government policies, shifts in the business environment, or investment opportunities? At Business Day, we don't just inform you, we empower with intelligent insights and analysis that keeps you ahead of the competition and well positioned to take advantage of opportunities whenever they arise. Join our exclusive community of Business Day subscribers and receive unlimited access to our award-winning content on desktop, mobile, and tablet devices and get access to our daily e-paper. Visit www.businessday.ng/subscribe or email subscription@businessday.ng today to get started. In an increasingly changing and uncertain economy, how informed are you on the government policies, shifts in the business environment, or investment opportunities? At Business Day, we don't just inform you, we empower with intelligent insights and analysis that keeps you ahead of the competition and well positioned to take advantage of opportunities whenever they arise. Join our exclusive community of Business Day subscribers and receive unlimited access to our award-winning content on desktop, mobile, and tablet devices, and get access to our daily e-paper. Visit www.businessday.ng/subscribe or email subscription@businessday.ng today to get started. In an increasingly changing and uncertain economy, how informed are you on the government policies, shifts in the business environment, or investment opportunities? At Business Day, we don't just inform you, we empower with intelligent insights and analysis that keeps you ahead of the competition and well positioned to take advantage of opportunities whenever they arise. Join our exclusive community of Business Day subscribers and receive unlimited access.
invite you back into the hall? Thank you so much. We need to invite you back into the hall, please. Thank you. We'd like to please invite everyone back into the hall, please. We'd like to invite you back into the hall, please.
Ladies and
We have
gentlemen,
an
please,
next
if you
session.
can
Thank
take
you.
your seats, we're about
Everybody
to
back into the hall, please. We're about to start.
get going
Thank
again
you.
with the rest of the event.
Back into the hall, please. I know you guys should eat, but everybody else, back into the hall, please. Thank you. We're going back into the hall. Good morning. Fine, how are you? Please, can we please go back into the hall? Thank you. Could I please invite you back into the hall, please? We're about to start again. Thank you. Can I invite you back into the hall, please? We're about to start again. Thank you, sir. Good morning, everyone. Can we invite you back into the hall? We're about to start. Thank you. We're going back into the hall. Hi.
Ladies and gentlemen, apologies for the delay, but we just wanted to be sure that our speaker is ready to join us, and I've been told now that he is. So this is going to be a discussion about Africa's recovery and growth, and we'll be hearing a media practitioner's perspective. And so moderating this session, I have the pleasure of inviting to the stage the editor of Business Day Nigeria. Please welcome with an applause Mr. Tayo Fagbule. Tayo will be engaging a columnist for Business Day as well, David Hundeyin, and I'll just step away now and Tayo will take it from here. Cheers, just see that.
All right. Good afternoon, everyone. My name is Tayo, as Wale rightly said, and I'll be moderating a session with David Hundeyin, who will be joining us. Yeah, that's David. How are you, David?
Hey, thank you, Tayo.
Okay, so we just go straight into the session so that we don't waste time. Several of you have read David. If you read Business Day regularly, Mondays, Wednesdays, and Fridays, be sure to read from David, whether online or in print. Now, David and I are going to be talking about Citizens' Conversation on Africa's Recovery and Growth. David, as you all know, writes a lot about Africa, about Nigeria, and about all things political, social, and economic. Now, Fola Folayan wrote this about David on his LinkedIn page. David Hundeyin is a brilliant journalist whose passion for the job is one of the deepest I have seen. His most admirable qualities are his dogged pursuit of truth, professionalism, and his incredible work ethic. Working with David is an editor's dream, and I totally agree. I've worked with David, editing his work, and also as editor, and it's incredible. I mean, what Folayan said here is very true. But one thing that Folayan didn't say, and I think I'll start off with that with David, is this. David, on his Twitter handle, used to write, "One man hurricane." If you check now, David says he's a retired hurricane. I wonder why. Anyway, David had to leave Nigeria a few months ago after the EndSARS, and so he's not in the country. But nevertheless, David has won many awards, including the GRC and Fin Crime Reporter of the Year 2021. He won the People Journalism Prize for Africa in 2020 and the Royal Commonwealth Society Right Around the World Award in 2006. So David, we're going to start off with one thing, okay? Why you're a retired hurricane, first of all, and then also, what's your take on how Africa responds to the world, okay, and the dynamics, okay, post-COVID? Let's start off with that.
Right, so with regard to the comment about being a retired hurricane, that's a nod to a New Year resolution that I had to be less combative on social media, so as not to grow or indulge a reputation that I thought was a bit unfair. But moving on to the meat of the question, which was my impression of Africa's response to the world's post-COVID recovery. It's impossible to answer that question without first of all starting with my impression of Africa's response to COVID itself. I've written and spoken extensively on my perspective on how Africa responded to the pandemic, which was primarily that Africa's response, and when I say Africa, I'm referring to the major economies in Africa. That's Nigeria, that's Kenya, that's South Africa, that's Ghana, those major economies in Africa. Their response to what we now call the global pandemic was informed entirely by what was done in the OECD, in the developed world, in the global north. measures like aggressive social distancing, lockdowns, places like Uganda, schools are still closed 2 years after. Even though there is actually any data or evidence to suggest that the closure of schools is helping their pandemic prevention outcomes in any way. And I was very consistent in saying this, that the way Africa responded was basically a poor man pretending to be a rich man, right? The measures that we adopted across the continent were informed directly by what we saw people doing in Europe and in China and in the US and in Canada. Meanwhile, our dynamics are completely different. Our economic demographics are completely different, and our problems, as I kept saying consistently, were completely different. Malaria is 2.0 than COVID-19. But no one has ever shut down an African economy because malaria exists, and the reaction of the continent to the world's post-recovery stance has merely been a continuation of this. I think Africa missed a huge opportunity in 2020, an opportunity that doesn't come around, that comes around maybe once a year. And that was an opportunity to sort of leapfrog several years or even decades worth of industrial evolution by seizing the advantage that was presented when the rest of the world went into a shutdown, when the rest of the world locked down. Knowing that we had, from examining the data as far back as April 2020 or May 2020, it was clear that for whatever reason, we weren't as affected as some parts of the world were. For whatever reason, maybe we'll still claim that we don't know. The opportunity presented to us was to basically present ourselves to the world as a place where production can take place. We're still fully open. There's an opportunity to do all the things you can't currently do in Asia and Europe and in North America here. We're open for business. Please come and do business. And the fact of being open would have presented a competitive advantage that we otherwise wouldn't have. We missed that opportunity significantly in countries like Nigeria, where I think was the Q2 or Q3 2020, we recorded a contraction of about 6%, which is completely disastrous. In a developing economy has no business going into recession, much less a 6% contraction. That's what happened. And since the more aggressive phase of the global shutdown has ended, and the world has started going to what is called the recovery, to my eyes, what seems to be happening is that Africa has not only lost the opportunity presented, but it's being further locked out, so to speak, of opportunities of the global economy. So whereas you had countries like South Africa, when the so-called Omicron variant was sequenced in South Africa, and there was no significant breakout of the so-called Omicron variant whatsoever, and you had the OECD enacting these harsh, draconian travel bans and policies against South Africa and against the rest of the continent, which have mostly been lifted now, thankfully. But that was the stance then. And the reason that happened then was because, again, Africa had positioned itself in a place where it was basically existing at the mercy of the rest of the world.
But so does that still, sorry to cut you short, David, but does that change your outlook? Now, how does that, change your outlook? Sorry to cut you short, David. I just wanted to cut in there and just ask, how does all of this change your outlook going forward for Africa? From a citizen's point of view.
So, my outlook is still, I would still say it's broadly positive. I make a lot of criticism about African economic and social policy a lot of the time, but at the end of the day, it's still we're still by far the world's youngest population demographically. I think the median age across the continent is still 19.7.
Yeah.
Nigeria is as low as 17.9.
True.
We're still technically on paper the world's fastest growing population of middle class people. So on paper, there's still a lot going for us. So broadly, I would still say there is some kind of positive outlook.
Okay.
It's not comparable to how positive it was maybe, I would say, 5 or 6 years ago, when we were having about things like the so-called means block, which we're not talking about again. But broadly, I would still say there are some opportunities, and it's still broadly positive. I will try and be an optimist.
Okay. Which brings me to you. Okay, you studied in the UK. I mean, after primary, secondary education in Nigeria, you went to the UK, and there's an article you wrote about the Occupy Nigeria, which you experienced from England, and your thoughts then about why the subsidy should remain and it shouldn't be removed. Then fast forward, you're here. You were here during the NSAS. You participated, and soon after you had to leave. Now, what has changed between 2012, when you were for not removing the subsidy, to NSAS, when you return to Nigeria, NSAS, and then you're having to leave Nigeria? What has changed? What's your view? Can you talk about that?
What
happened to you?
Right. So the major thing that sort of changed, that made my viewpoint evolve, was experiencing Nigeria at a ground level. And I'll explain what I mean by that. Very often, people who come from a similar background, they tend to sort of experience Nigeria the way a safari tourist experiences Kenya. Like from behind a sheet of glass inside an air-conditioned vehicle. But when I came back to Nigeria, it was a bit different. So I actually had the opportunity to live in what most people experience as Nigeria. I remember when I moved out of my parents' house in 2015, I stayed for 3 years in an apartment in Bariga, which was a huge culture shock for me. I got to experience what Nigeria actually is. So these things you read in the newspapers, I got to experience what these things actually mean at a level on the ground to the regular Joe. So it's not just an airy-fairy academic exercise anymore. When you're talking about decisions made in Abuja, you can see the impact they have on the ground, in person. You can see, like, it becomes real, it's human. So these were the things that sort of informed my evolution. With regard to the subsidy conversation specifically, the number one thing that I came to understand after returning to Nigeria was that the narrative that a lot of diasporans, which I used to be at the time, the narrative a lot of them find it very easy to buy into is that somehow what is wrong with Nigeria is a result of the interaction between so-called neo-colonialists and their supposed puppets on the ground. It's a very seductive narrative to buy into. It gives you a very easy scapegoat to blame everything on. So everything that goes wrong in the country, every decision you don't agree with, you blame it on the British or whoever. So it's just it's an intellectually lazy but very seductive thing to buy into. But when I came back to Nigeria, and again experiencing Nigeria from the ground level, understanding that to all intents and purposes, Nigeria is actually a politically independent country. It actually is. That thing that is called the neo-colonialism. Maybe if you're talking about like French Africa or something, the Francophones, yeah, maybe there's a bit of colonial territory there. Not with Nigeria. Nigeria is actually a functionally independent republic. Nigeria makes all its decisions on its own. So the things that you don't agree with are being decided by people who look just like you, who are in Abuja and in Lagos and in Port Harcourt and in Benin and in Kano. So that was the major thing, understanding that actually there is agency here.
Yeah.
And the people who are responsible for this state of affairs are people that you know, people that you have met, people you interact with. You went to school with your kids. This is the reality. There is not some white man who is responsible for any of this. And once you come to that acceptance and that understanding of the reality of the situation on the ground, then it forces you to start to re-examine everything else that you think you know about the country you grew up in. So whether that's this subsidy conversation where you realize that actually, Occupy Nigeria was basically a political platform at the time. I simply wasn't aware of it. I thought I was investing on behalf of fuel prices, and it turns out that's not what was happening at all. And by the way, the mere fact of fuel prices being low isn't in and of itself a good thing if the opportunity cost of that is, the opportunity cost of spending 1/3 of your annual budget on a single consumer subsidy. These are the things the pieces of information that started to float around in my head a bit more, and I started to become a bit more cerebral in my understanding of Nigeria. So basically what changed was not looking for simple narratives to explain everything, just simple things that you don't have to think, but instead going through the mental rigor of actually understanding things. Because Nigeria is a very complex place. Different things have many different things interplaying there. There are many different explanations.
Yeah.
And it actually takes a long time to understand, to come to some understanding of.
But that will bring me to, going back to what you said on your Twitter profile, says retired hurricane. I imagine the conversations you were trying to have when you were going through this process of, this is what living in Bariga, saying things, there's agency, people must take ownership for their decisions, we must stop this lazy narrative. That led you to be a bit combative, would you say? And what's now changing? Why are you now saying, I'm a retired hurricane? What's changed there? Are you saying those things that annoy you or annoyed you don't annoy you anymore, or you're taking a different tone to approaching them?
Oh, they do annoy me. They're never going to stop annoying me. All that has changed is that I think I'm getting older, and as one gets older, one realizes that regardless of how justified you think you are, regardless of how much you think your energy is needed, you might be in the right, but simply having a reputation for coming across a certain way, even if you don't necessarily come across that way, but once you develop that reputation and people start to expect that from you, on a personal level, it causes problems. People start to project things onto you that aren't necessarily true. I remember, so when I really made the decision that, okay, I actually have to sort of try and calm this down. I remember I was having a conversation with someone last year, someone I met on social media, and this person told me that, look, I've been wanting to have a conversation with you maybe since 2019, but I was afraid to send you a message because you have this reputation like you are this dragon that will eat me up, that will bite me. So I didn't say anything for 2 years, and I thought, wow, what a terrible thing, So is that how I come across? So, even if I still think that Nigeria needs a very heavy dose of straight talk, of people who say 2 + 2 is 4 without any unnecessary prevarication. Even though I still stand by that, I just think for first. I'm turning 32 this year. I'm not getting younger, so at this point, maybe it's time to start doing it way. And then, there will always be new people coming up anyway who are going to be more fiery than I am, so it's fine.
All right, but so what would you say, like the 5 things that annoy you still, and then maybe if we have time, we can take questions from the audience if we have time. But.
Right, so
I'll take one question.
5 things.
5 things that still annoy David, and whether come age or not, you'll still be writing about.
Okay, the first thing I would say is economic illiteracy in government policy making. So when you have a government doing things like closing borders, where there's absolutely no evidence, no data whatsoever, that this will actually result in, growing your local industry. But it's just something that people just do anyway. That's number one thing, economic literacy and policy making. The second thing, which is related to the first, is making decisions that aren't based on data, or strongly believing things that aren't based on any data, just based on this is what I've always been told and hearsay, and you just believe it because, well, that's what the accepted narrative is. The third thing will probably be comprehension deficiency, basically, which is something I come across, particularly on social media a lot. where I've realized that the fact that you are literate in a language, you can read it and write it and speak it, doesn't necessarily mean you fully understand it. Like it's because you can say something and somebody just literally does not understand what you're so they are reading words. So comprehension is the lack of comprehension is a significant there. Fourth, I would say the unfounded superstition. That really sort of irritates me to an extent, because I feel as if people with the history that we have, particularly over the past 100 to 200 years, more than anyone else, people like us should have understood that some of these things that maybe our ancestors did or didn't do, these things were very counterproductive. And if there's one single group of people on earth that should want to evolve and move past narratives, it's us. But that for whatever reason, that isn't always the case. So for example, that whole conversation about money rituals, which I found just mind-numbingly daft.
And the fifth
then
one?
The fifth and final thing, I think would be bullying, basically. The idea that being in a position of power, be it in person, be it over social media, whatever, sort of entitles you to step all over people. Like I have something personally against bullying, and I guess if you've read many of my interactions online, which you have, then you would see how I react to such things. So yeah, I guess those are 5 things.
All right. Okay, I'm told we don't have time, so I'm not going to push it.
Let us take one.
Okay.
But I would say, and I will really appeal to you, please, I'll take your question, but you have to be really brief, and we also need David to be very brief in his response, because we've already overrun.
Okay, my name is Charles from the shipping sector. David, we've had a narrative of where Nigerians or Africa as a whole miss several opportunities and then pass on the reports on the queues you said. Now, I ask, what can we do to change the narrative, to unlock investment opportunities in Nigeria or in Africa and growth? Should we continue from where you stop, fighting the media war, or should we build infrastructure of the mind to change the narrative? Or is there anything the government or we as individuals can do to help change the narrative, unlock investment opportunities in the country, and to foster growth in Nigeria? Thank you.
All right, David, if you can just respond briefly to that. Thank you.
Right, so in less than a minute, I'll just quickly say that I don't really think it's possible for something to be done without some significant level of government involvement. I think in this part of the world, we've gotten used to the idea of sort of building around the government and innovating our way around the government or through it. But in this case, when we're talking about things like trade policy, the government obviously has to be at the forefront of such things. So I think the only solution, unfortunately, as much as even I don't want to hear it, is a political solution. There has to be a government in place that actually understands what economics is, how an economy runs, as against people who have lived all their lives on government payroll, don't have the faintest understanding of how to create value. So I think once you have that basic thing in place, then we can start having those conversations. But without that, I don't think we can innovate our way around the government, unfortunately, especially not in Nigeria.
Thank you, David. Okay? Thank you for your time, and keep writing.
Great. Thank you very much. I think that was a great interaction. I think it's always great to listen to the media to get their perspective on these issues. All right, so we're moving on to our next panel conversation. And my co-host will be moderating that session, so please welcome Lele Balde as she steps forward. Please, can we put our hands together for her? She will be moderating. I think you can be more generous with your applause. Please, can you put your hands together for her? Thank you very much. So she'll be moderating a session on healthcare, the Africa situation, and how we move forward. This is something that obviously impacts all of us. And I've been just speaking to her just now. I think she wants to change the the format, so to speak, in terms of how she wants to do this. So she might be trying to get your perspective, but very early in the conversation. So I will just hand over to her, and it's over to you. Yeah.
Thank you very much, Wale, and good afternoon to everyone in the audience. Again, my name is Lele Balde, and I work with Business Day Media. It's my great pleasure to be moderating this conversation with you all today. So essentially, today we'll be talking about healthcare and the state of healthcare in Africa, opportunities in building a healthcare system that truly cares. Throughout this conference, we've been talking about COVID-19 and the impacts of the COVID-19 pandemic in Nigeria and in the African continent. And I'm sure that most of us here have been affected in one way or another by COVID-19 pandemic. So before we get started on the panel session, please kindly put your hands together for Akin Oyediran, who is the Managing Director of Jubilee Syringe MFG Company Ltd. I think we can do a better job than that. Let's welcome him onto the stage as he joins this very important panel on healthcare. Welcome, sir.
Thank you very much.
Thank you. And joining us online will be Dr. Jedinthale Jitahi, who is the Group Chief Executive Officer at AMREF Africa, and he's being represented by Boniface Lavano, who is an adjunct lecturer at AMREF International University. So Boniface, welcome to the panel session. It's really a pleasure to have you with us as we discuss this very, very important conversation. So, Mr. Oyediran, thank you for being with us on this panel.
Thank you for having me.
You're most welcome. You can use your mic and press it. Yeah. So before we get started, I'd actually like to go straight to the audience to ask a question. The question that I have is, let's maybe start with a poll. How many of us in this room were infected by COVID-19? From the year 2020 to now? Just a show of hands. Don't be shy. Okay, so we have some people at the back that are being brave and telling us that they were infected with COVID-19. I'll also be brave and tell you that I've had COVID twice since the year 2020. I think that before it was something that people were ashamed to talk about, but it's nothing to be ashamed about. Many people have been infected by it. So that just gives us an indication of the people who are willing to come out and say that they've been infected by COVID-19. When we think, excuse me, when we think about...
Lele, I'm so sorry. I think you may have missed out on the speaker. Mrs. Akinbolagbe is supposed to be part of it.
Oh, I apologize. It's not on... I'm so sorry about that.
All right.
Okay.
So please, if we can welcome her to the stage as she joins the panel.
Sorry, Dr. Tinuola Akinbolagbe, the CEO of Private Sector Health Alliance of Nigeria.
Thank you.
My sincere apologies, Dr. Tinuola. My sincere apologies for that. Thank you, and again, sorry about that. So please welcome Dr. Tinuola Akinbolagbe, who is the CEO of the Private Sector Health Alliance of Nigeria. Let's put our hands together for her and kindly accept my apologies for that mishap. So Melinda Gates famously had a video that said that bodies would be dropping dead in Africa because of the COVID-19 pandemic. And essentially, we've been the continent that has probably been one of the least affected, I would say, by God's grace. However, I think that the COVID-19 pandemic really showed us how unstable our healthcare system is, especially the public health sector. So I just wonder, while we look at our healthcare system in Nigeria and also within the African continent, where would you say that we are today in terms of development of the sector and also the advancement of the sector in comparison to other countries in the world? So Dr. Tinuola, I'd like to ask you this question. How would you rate the Nigerian healthcare system right now?
Thank you for the question. And absolutely no worries. I know you saved the best for last.
Of course, of course.
So I actually would like to start by acknowledging the efforts of Business Day in setting up this conference. The theme for the conference is, thank you. Africa recovery, and you find that a lot of conferences and discourses on economic recovery do not actually look at the health factor. So for the fact that they managed to recognize this and include this as a major section of this convention is quite commendable, and I'd like to thank them for that. So when we say Africa, and we say Africa, there were some discussions yesterday, is Africa emerging or is Africa rising? I think Africa is emerging, but we're set to rise. From a health point of view, if we're talking about economic development, now good health is an outcome of economic development, but very importantly, it's also a foundation for economic development. So if we're talking about economic development and we do not look at how healthcare contributes to that, then we're making a big mistake. When you have good healthcare, people are more productive. And when they're more productive, they work more, they earn more, they spend more, and they invest more. And that is what economic development and Africa recovery is all about. There was a gentleman earlier on from Renaissance Capital who was asked a question about how in Nigeria, for instance, do we move from an NPR of 11.5% to 2%? And his response was, the fertility rate needs to drop. So in Nigeria, our fertility rate is it's between 7 and 9 averagely across the nation, but we're looking at it dropping to 2. How does that happen? By the provision of reproductive healthcare services. And how does that get to the people on the ground? It's if you strengthen your healthcare systems. So have we done a lot? Yes. Could we have done more? Definitely. The pandemic really exposed the issues that we have with our healthcare system. But for me, it's a bit of a blessing in disguise. I say that because now the focus is on the healthcare system and what we need to do. And so we mustn't miss this opportunity to get the private sector as well involved. Because if we say we're going to leave it to the government, when the businesses shut down, when pandemics happen, when everybody's on lockdown, we're all affected in the private sector, not just the government. And then health is something that unifies everybody. The rich, the poor, the unemployed, the employed, the CEO, we all have issues with health. So health, I call it a leveler. So whilst it's very tempting for us to ignore it and say, well, somebody else will do something about it, we do have a collective responsibility to ourselves, to our businesses, and to our communities to do something about the healthcare system. Thank you.
Thank you very much, Dr. Tinuola. And I definitely agree with you, and you can keep that. I definitely agree with you in the sense that health is a leveler. So over to you, Akin Oyediran. Do you have anything you'd like to add to what Dr. Tinuola has said? And also, before you go on, what are the lessons from the pandemic, especially in terms of the structure of healthcare in Africa? While we have always known that investment in health care in Africa is low, how can we deploy resources better, in your opinion?
Thank you very much. Is this working?
Yeah, it is.
Thank you very much. Thank you very much, Dr. Tinuola. I definitely agree with Dr. Tinuola in terms of understanding the fact that we need to improve our healthcare system to also improve our the economics. I come from a manufacturer's point of view, where we are the largest manufacturer. Jubilee Syringe is the largest manufacturer of syringes in Africa. And when the pandemic happened, most people did not know this, but the first thing China did was stop the exports of medical devices out of China. So because of that, there was a situation where there was a gap in the marketplace for masks in Nigeria. I don't know if anybody noticed. At first, the prices went up. Mm-hmm. There was a gap for other medical devices. However, because Jubilee had been producing and was producing syringes, we were able to keep the pricing in the market down and the availability of the products in the market down because we were able to continue producing. Now, we did not shut down in terms of because of COVID. Instead, what we did was we locked in about 80 employees in the factory and continued producing because we realized that if we did not have enough syringes in the marketplace, it will automatically become a national defense issue because the easiest and the fastest way to get liquid into people's bodies is syringes. So from that perspective, there's a lot of opportunities that there's a lot of insight that COVID showed us as a company, and also the hospitals to see that if we don't start manufacturing some of our devices locally, if there's another problem, it's going to be a situation where there will be shortages in the marketplace, and that could be a major issue.
Thank you very much for that. Oh, you can keep that, actually. Some very good points you made.
Okay.
I'd like to go over to our speaker that's joining us online, Mr. Boniface Labano. We haven't forgotten about you. I know that you are based in Southern Africa, so I wonder if you could please give us a perspective from your side of the world. Over to you.
Okay, thank you. Thank you very much for the opportunity. I think, as was mentioned, I'm representing our group executive officer, Dr. Kithinji Kitai, who unfortunately was not able to join. I hope I will do justice in filling his very, very big shoes. So yes, I think from my perspective in this session on the state of healthcare in Africa, and particularly looking at the view from the Southern Africa region, I'll definitely say yes, COVID has come to be a game changer, especially when you look at how it has impacted what the 6 key pillars of the health system, talking about the issues of access to commodities, which goes hand in hand with financing, the issues of human resources, the issues of access, the issues of leadership. So all the 6 pillars have really been tested to the limits, which again, but if you look at the flip side, you can then see that this pandemic has also come to show us how fragile generally our health systems are, and probably pointing at even a greater need for further investment and strengthening. So in my submissions, I'll be looking at the state of healthcare, but also looking at the opportunities based on what COVID-19 has come to reveal, or maybe to confirm what we already knew. But obviously, we'll look at issues around political will, the issues of livelihoods, which go in hand with trying to save lives, but also tying that with livelihoods. Thank you.
Thank you very much, Boniface Labano, for those remarks from Southern Africa. So I'd like to move on to a different topic. When we think about healthcare, a lot of aid is associated with the fact that our healthcare system is the way that it is. So we have international organizations that are here to essentially help with the healthcare systems in Nigeria and other parts of Africa. And that can be quite problematic if we're relying on outsiders to essentially help us with our local health system. You work with the Alliance of Private Healthcare in Nigeria, the Private Sector Health Alliance of Nigeria. What's your opinion on collaboration with both private and public sector? How do we get the healthcare system right, and what does that really take? And I'm sure that you probably agree that it would take a collaboration between public sector and private sector, because as we've seen, we can't rely on the public sector for everything. So what are your thoughts on collaboration, on how to really get our healthcare system to where it needs to be? Thank you.
Thank you. So just to clarify, I work with an organization called the Private Sector Health Alliance. So we work with the organized business sector, the organized private sector, and their attempts to intervene in the healthcare sector, not with the healthcare providers directly. But that being said, it's understandable that a lot of the international agencies that have funded our healthcare in the past are withdrawing because they also have to focus on the problems at home highlighted by the pandemic, which affected the entire world. There are certain countries in Africa, I think regrettably Nigeria is one of them, that have close to 20% of the healthcare spend being entirely footed by international agencies. I believe Malawi is one, as well as Uganda. So ideally, when someone comes to fund you, the expectation is that you would then build up your capacity, and after a certain amount of time, they can withdraw and you fill up that space. Unfortunately, we've not had that. And now we've had the rude awakening when the pandemic occurred. I mean, the private sector must be involved, and the private sector must collaborate with the government to provide adequate healthcare services. However, the government has to put incentives in place. The government has to provide an enabling environment. There needs to be significant funding. Now, I say this as a doctor. Back when I was in medical school in the 90s, we had no financial education. The doctor graduated from school, no business knowledge. You just came out and you were ready to treat patients. Thankfully, that has changed over the past 2 decades. So with more financial education and financial literacy, you find people in the private sector being able to bring forward propositions, proposals, which can be funded. I mean, my fellow panelists can speak to, I'm sure, some struggles that he had getting financing. Because when you bring out a proposal that you want financing for a healthcare venture, most people don't understand it. They're looking at short-term investments. Investments in the health sector are more medium to long-term. So we need to create an enabling environment, work hand in hand with the government, and very importantly, the organized private sector across Africa must get involved. Because whether we like it or not, if you're of a scientific background and you understand that with global travel, you could be in 3 continents in 24 hours. It's not a matter of if, but when. That's the truth. It may not be a pandemic, but there will be other infectious diseases that will sweep across the world and affect us all. And so we must prepare for that. Thank you.
Thank you. I mean, when I think about other diseases that might affect us, it's kind of scary because of what COVID's been like. But just to jump on what Dr. Tiniola was saying, you are the largest producer of syringes in the continent of Africa, which is quite an achievement. Let's put our hands together for that, because that's quite an achievement. Can you talk to some of the struggles that you've experienced in terms of production, and also the fact that as an African continent, we're all relying on vaccines, for example, from other countries. We're not actually producing vaccines on the African continent. What issues can that potentially pose for our economies?
If I start to talk about manufacturing struggles in Nigeria, we'll be here till tomorrow morning. However, the most important thing is this. You have to, for manufacturing or even medical manufacturing to work in Nigeria, you have to understand the playing field and where you are doing your business and manufacturing. Now, a lot of manufacturers will come in and complain about the same things: importation, competition, access to capital, access to good manpower. Everybody will complain about that. I think the most important thing for us is that in our deciding to open up in 2017 in Akwa Ibom, after a long research on the best place to actually manufacture in Nigeria, or maybe Nigeria, or even in Africa, we realized that logistics was very important, access to manpower was very important, access to your local raw materials was very important. And with that, we chose Akwa Ibom. And of course, the government the government in Akwa Ibom was also is also very, very business friendly. So we've been able to establish, we've been able to grow the business, we've been able to manufacture. We're manufacturing about 2.7 million syringes per day right now.
Wow.
And
Let's clap for that, yes.
Thank you. But one of the things that our investors were very, very particular about was quality. Because one of the issues that we have as a Nigerian manufacturer is once people see made in Nigeria, it's different from made in Switzerland, for example. And we decided that, look, if we concentrate on quality in a place where quality is not really that important, then you automatically stand out. And because of that, the acceptance of our products, not only in Nigeria, is massive, but also across Africa right now. I mean, we have people that are actually looking to import our products from South Africa as far as Germany. We are all in West Africa already. Now, the opportunities in the healthcare sector, from my perspective, is being able to provide the tools that the nurses and the doctors and the workers need. If they don't have the tools, the cotton, the mask, the pans, and if we have to import those things, and those things are important, no matter how much the NGOs invest, the cost of just basic needs or basic instruments that you need in the hospital will be so high that it will be a burden on healthcare. But if we are able to provide and produce quality medical devices locally and keep the cost down, at least wherever the money is coming from, whether it's private sector, whether it's NGOs, whether it's government, at least there will be enough to actually afford enough devices to go across the board to help people out. That's where we come from.
Thank you very much for that. So before I go over to the audience for questions, I'd like to throw out this question to all our panelists, and if you could each answer in about 1.5 minutes, that would be great. So essentially, should the focus be on training, should it be on research, or should it be on technology when it comes to healthcare? And from your perspective, what is the appropriate path for a solid healthcare system on the continent, or let's say in our specific region? And even locality, and should figure out, how do we figure out what works? So what should be the pathway for healthcare in Nigeria or in South Africa for our online panelists? So I'll start with Boniface Labano. If you could tell us your ideal pathway for a healthcare system in your region, and then I'll ask you and you to answer before we ask the audience for their questions. So, Mr. Boniface Labano, over to you.
Okay, thank you very much for that question. In my view, and from what we have seen, particularly from our work with AMREF Health Africa, across Africa, it's a combination of everything. But obviously, the issue of prioritization and focus is very important because the issue of training goes hand in hand with access. Because no matter what you do in terms of making commodities service available, if you don't have a well-trained, well-motivated, and well-distributed healthcare workforce, our efforts will not achieve the desired goals. So it's important that whoever is in the front line of service delivery is able to provide the services with quality, with confidence, and with the motivation that goes with it. So if, for example, you were to look at currently the issue of the vaccine drive, which is quite topical in the context of COVID-19, but going across even affecting other services, particularly child immunizations and even issues of maternal care services, it's the health workforce out there who deliver these services. So if our governments, if our partners and everybody involved does not invest enough in terms of ensuring that the workforce is well-trained, it's well-skilled, knowledgeable, it's equitably distributed, because we also see this whole issue of now having certain corners of our countries served by very, very few people, or even the issue of access to specialized services is still a luxury in most of our care settings, which in the event now means people have to travel and use so much out-of-pocket monies for them to access these services. So taking quality health services through a well-trained workforce, in my view, is quite central, especially in this mode where we are in the recovery mode, where we're saying, so let's save both lives, let's save also livelihoods. Thank you.
Thank you, Mrs. Labano. Dr. Tiniwala, what's your approach to the pathway that we should take for our healthcare systems in Nigeria or in the region?
Thank you. So, to the earlier question, I would rank technology first, because technology, if the appropriate technology is deployed, it gives us the opportunity to leapfrog ahead. I mean, during the pandemic, we found out that there are many ways to access healthcare services, and if the right technology that is suitable for this environment is deployed, then we can see a lot of strides. For training, I think we need to first solve the problem of brain drain. There's no point training people who are going to leave. So we need to come up with systems it's a fact, we need to come up with systems to encourage compensate adequately, and retain the human resources for health that we have. Thirdly, I would put research. For the African continent, there's not a lot known about our genetic makeup. A lot of studies haven't been done, and so even the pharmaceutical companies cater more to other populations that they have had extensive genomic study, and so we need to have that as well. For the future of healthcare systems and the way that we need to go, I think number one, front and center, would have to be healthcare financing. We've talked about this. There must be pools of funds available, whether we choose to go the route of health insurance or have some type of tax incentive put in place for the private sector to fund it. There must be ring fencing of funds for the healthcare sector. Secondly, I think there's a lot of duplication of efforts from the international agencies. We do appreciate what they're doing, but it needs to be better streamlined so that areas like HIV, tuberculosis, that get a lot of funds, some of those funds can be directed to other areas, reproductive health, primary healthcare systems, human resource for health training, non-communicable diseases, and things like that. I think also very important, funding human resource for health. I've mentioned that. We need to have a focused look and actually take deliberate steps, not just talk the talk, but actually walk the walk and make sure that we reward our human resources for health and make it worth their while. I mean, we lost so many people during the pandemic. I actually know a number of people who died, so we must put the human resources for health. We can look at task shifting. Not everything has to be done by the doctor. Some things can be done by other cadres of health workers. We need to put systems in place for the most vulnerable people in our society, the elderly, the young, the disabled, the destitute. There are things that can be put in place for them. I think if we can even focus on those things, we will see a huge difference in our health sector. Thank you.
Thank you for that, for those great points. Mr. Oyediran, over to you.
I cannot agree more with with my co-panelists. One of the areas that we have to look at is this. Look, there will be no brain drain if there was no brain. Okay? So the most important thing here is this. We definitely it looks like from what's happening right now in Nigeria with the movement of doctors to the West, it looks like we have trained doctors. The same thing with the nurses. So what is the real reason that we are having these problems with healthcare in Nigeria? One, I believe, is inadequate provision of the equipment. You take a doctor that leaves Nigeria and goes to the US and automatically he becomes an award-winning surgeon. Well, the difference is that he did not have the same equipment that he has now in New York that he has when he was in Nigeria. Mm-hmm. So we need to figure out a way, and another reason for the brain drain is compensation. Nobody really wants to talk about that. But listen, if I'm a trained doctor and I can make 20 times what I make in Nigeria, in New York, my wife will direct me to go there. I might not want to go, but my wife and my children will start talking to me like, Daddy, we got to go somewhere. So we need to figure out a way to retain our medical workers, the nurses and the doctors, through some kind of system compensation through the government and also tax incentives. I personally believe that doctors and nurses and people in healthcare should have tax-free incomes. Really do. And there are different ways we can entice our brainy medical workers to actually stay in Nigeria. The other part is funding. A lot of times when people think of funding healthcare in Nigeria, the first thing they think about is government. Well, the government cannot do it alone. So what else do we need to worry about? Or what other options do we have? Well, we have financial institutions that don't really understand how to fund healthcare. Financial institutions think that funding healthcare means you're going to open up a hospital. Well, no, there are so many different things in the supply chain line for delivering medical care and there's so many very profitable ventures that you can go into place that will entice the financiers to finance these businesses. The problem is the way we look at healthcare in Africa and the way we look at healthcare in Nigeria. It doesn't have to be government funded, and it doesn't have to be expensive. It just has to be creative. The government can come up with schemes like, first, for example, there is no reason why you should be paying taxes on buying medicine in the pharmacies. Okay, you shouldn't be paying taxes for healthcare. There's no reason why we should pay import duty on medicines coming into Nigeria. I shouldn't have to pay import duty if I'm importing a bed. But at the same time, we also need to figure out how we're going to encourage local manufacturers to manufacture these things so that we can have them available at affordable prices in Nigeria. If we look at healthcare from those point of views, I think we'll find more solution than the same old, we're going to government and we need the NGOs. Look, if the government says, look, the NGOs even coming into the country should earmark X amount of their monies into setting up local manufacturing companies, then we'll be fine. Look, when WHO or Bill Gates Foundation comes into Nigeria and say that they spent X amount of billions of naira on providing health care, well, a lot of that money actually goes back to their own manufacturers.
Right.
So if Bill Gates is spending $1 billion in providing healthcare in Africa, and 900 million of that money is going to buy, example, syringes from Europe, where did he spend that money? Okay, so those are the kind of things we have to really look at. You have to be innovative. I think that's where I am coming from.
Thank you very much for those really very interesting points. So we have a few questions in the audience, and I'd like us to go to the woman behind over there to start, and then a couple of other hands. So over there at the back, yes. Thank you. So please kindly tell us your name, what you do, and who your question is directed to. Thank you.
Right, so we really need you to cooperate with us to manage the time. Is it you? Okay, yes. Please, straight to the point if you can. Thank you.
Good morning, or sorry, good afternoon.
Good afternoon.
Please permit me, mine will be a contribution. I'll make it brief. I'm a medical laboratory scientist, and I do business development service. So I've been saying this in so many business summits like this, and I hope we'll like to hear, especially for the investors here. I make bold to say, from what he has just said, just multiply 2.7 by, let's say, I don't know how much the syringe is, maybe as little as 50 or 100 naira, and see how much he makes a day. Health sector is the lowest hanging fruit for us to grow our GDP. Quote me anywhere. That's the lowest hanging fruit. When you walk into the hospital or any laboratory, look at all those lists of tests that are there. None of the kits are made in Nigeria. Over 100 or 200 of them. Remember the other tests, specialized tests that are not on that form. You can imagine if we start making all those kits in Nigeria, and we are trained to do those things. In the 70s, we were making vaccines at Yaba. So what we need to do is to train, just like the question you asked. When you train, research can happen, technology comes. You can't do research without an ISO accredited laboratory. That is one of the problems we had with making our vaccines and our drugs. So mine is just a contribution. Can we channel light on training our healthcare workers, just like she has said, when we're in school we didn't learn business. When you train the healthcare workers in business, you see a lot of development in the private angle. We'll start making our kits. If you go to CBN and see the volume of import of medical consumables, you'll be amazed. If we can shut that down, I bet you Nigeria will grow in the line of health sector.
Thank you so much for your contribution. Thank you very much for your contribution. Indeed, we definitely need to privatize a lot of our healthcare approaches, and I know that there's a lot of different startups that are focusing on that at the moment. I see a couple of hands. Please feel free to pick, and then I see another question over here on that end.
All right. Good afternoon, everyone. My name is Fabian George, and I'm a co-founder at Escort Realty. It's a real estate company. My question is for Mr. Akin. How have you been able to manage the challenge that comes with logistics in your business since inception to date, particularly in a space where business owners have to create infrastructures to aid business growth?
Again, this question always comes out. How are you able to manage logistics and supply chain? You have to be innovative. One of the reasons why our factory is located where it's located is because of the ease of getting to the rest of the country and actually access to a port in Port Harcourt. It's faster for me to get my trucks from Akwa Ibom to Kano than for you to get your truck from Lagos to Ibadan. Okay? So you look at the logistics and you have to be innovative. The biggest issue, there's a lot of opportunities in manufacturing in Nigeria, a lot. The problem is everybody's looking at the same things at the same way. You have to be innovative and look at things from a different point of view. Yes, we can all sit down and complain about infrastructure, but you know what? You cannot play basketball with soccer rules. You know you're doing business in Nigeria, you make sure that your research and your business plan follows the logistical and supply chain issues in Nigeria, and then you move on. Thank you.
Right.
Thank you.
Just so you know, we do have some questions on Slido as well.
I'm seeing that there's a repeated question, so I think we can probably just take one from the audience.
Okay.
Yes.
Let me go to the back. I think we've let them out a bit.
All right. So I think this will be the last question. And I think any other questions can be taken offline with the speakers.
Okay.
Please. Thank you.
Thank you very much. My name is JFK. I'm the CEO of Nguvo Health. It's interesting, the conversation we've had so far. But unfortunately, we omitted a very important part of healthcare, which is mental health. Knowing that COVID happened, we have an epidemic that we actually really don't talk about, which is the mental health issues. From our data as a tech startup that runs a mental health therapy platform, we can tell you that there's an increasing epidemic. There's an increasing prevalence of mental health issues. So my first question is going to be, what are the strategies that you think we need to imbibe or we need to do in Nigeria and Africa to offer more services? And this is the second question is directed to Dr. Tinola. I'm sorry I may be putting you on the spot. That what's PSAN's plan to ensure that there's much financing for mental health services and to people that don't earn. We've made it easy and affordable for people to access therapists, but unfortunately, those people in the lower end cannot even pay for it. But mental health issues does not know any age, any color, or any background. So
I think the message is clear. Thank you.
So Dr. Tinola, if you could answer both questions, that would be great. Mental health is extremely important. Thank you for bringing that up.
Yes, thank you. You're quite right. Mental health has been brought to the forefront. At PSAN, interestingly, one of our programs right now is actually targeted at mental health. It's called the PI program, which is Pandemic Insecurity and the Emotional Effects. We avoided calling it mental health because there are also negative connotations associated when you put the word mental. So that's a program that we're working on and we're deploying this year to put together resources to quickly identify, mitigate, and help to resolve some of the mental health issues that we've seen as a result of the pandemic and all the insecurity issues that we've had in Nigeria. What's the second question?
About what you're doing specifically at your organization to promote mental health.
Yes, so that's the one, the first question. That was to the second question.
Sorry? That you're putting in place at your
Yes, thank you for that, for the prompter. So the strategies we're putting in place at PSAN is we work with the private sector. That's the private business sector, and we're mobilizing resources. This is not just money. Funds, human capacity, skills, other resources, so that we can work directly with the state governments. We're looking to build 774 primary healthcare centers across Nigeria over the course of the next 10 years. We believe that primary healthcare affects 70% of Nigerians, and 70% of people can get their immediate needs met at that level. We're working together with the Nigeria Primary Healthcare Development Agency, using the models that they've developed. There's no point reinventing the wheel. and working with the business sector to mobilize resources. We're set to launch that at the end of the first quarter. It's called the Adopt a Healthcare Facility Program, and you'll get to hear a lot more about that during the course of the year. Thank you.
Thank you so very much, Dr. Tinuola. Please join me in clapping for our panelists. Mr. Akin Oyediran, thank you very much for being with us. Please clap as I'm mentioning the names, Dr. Tinuola Akin Bolagbe and Mr. Boniface Slabano from Southern Africa. So this panel session has been the state of healthcare in Africa, opportunities in building a healthcare system that truly cares. Thank you very much to all our panelists. Let's put our hands together for them as we take our picture. Thank you.
All right, take a quick photograph.
Thank you.
As we round this up, many thanks to Mr. Boniface, who joined us also joined us virtually for this.
Thank you.
All right, thank you very much. Please, another round of applause for them as they walk up the stage. Thank you. All right, and so up next is a conversation about investments, innovation, technology, and infrastructure. The focus is smart projects meet smart money. How to scale your success in Africa and the state of tech in Africa and the investment opportunities. So I'll just invite to the stage the speakers and moderator for this session, starting with Dr. Pamile Osibo, who is the partner and group head in investment at Platform Capital. Please, a round of applause for him as he steps forward. We have Ojoma Ochai, partner, Creative Economy Practice, Co-Creation Hub. Please, a round of applause as well. And then we have Rob Withagen, who is the CEO of Asoko Insights. I do believe Rob is joining us virtually, or is he in the room as well? Apologize, I forgot to invite the moderator for this session. I'm sorry, I think I need to clarify. Who is moderating this? For a second, I thought it was Tayo. Is it Tayo? Can I get clarification on that? Oh, you are. My apologies, I don't have the information here. But please, put your hands together for the moderator. She would introduce herself. Yes, it's over to you. Thank you.
Good afternoon, everyone. My name is Tosin Dabiri. I'm the CEO of Caller Gig, and I'll be moderating this panel. And the panel is about the state of tech in Africa and the investment opportunities. And our panelists have been introduced, so I'll just, jump right to it. I think, first of all, we should just start with the investment opportunities that are there available for, African tech companies. And I'll start with Rob. I know he's joining online. So Rob, Asoko is an intermediary between fundraisers and investors. What are some of the biggest challenges of fundraisers finding good partners and to the investors as well?
Thank you, Tosin. Is my audio coming through okay?
Yeah, I think we can hear you. We can hear you.
Great, thank you. Great, thanks, Susan. Perhaps just 2 quick words on introduction. So Asoko Insight is a corporate data provider exclusively focused on Africa. So we focus on the collection and analysis of data across the board of Africa's private sector, both including tech-enabled startups, which is obviously the focus of today's discussion, as well as more traditional SMEs. So in my answers, I range across, I guess, 2 different asset classes as far as investment opportunities is concerned. But to your question, so looking at challenges of fundraisers finding investors, perhaps better to start off on a positive note. I think the ecosystem for those looking to raise cash has significantly improved over the last few years, particularly for startups in the tech space. I'm sure we'll be talking about this more on today's panel, but a lot of success stories out there, particularly in Nigeria, around fintech players and other related tech-enabled startups in attracting significant amounts of venture capital and strategic capital. So to really start the answer as to the changes over the last few years as far as the interaction between fundraisers and investors is concerned, I think first of all there's a good development there. On the remaining challenges from the fundraisers side, I think first and foremost it's a question of access. There's a lot of startups out there that are looking to get the attention of investors. It's a matter of them identifying which investor to speak to, and secondly, how to get in front of that investor. And I'm sure on the panel we'll talk a little bit more about how technology is trying to address that problem. But challenge first and foremost is one of visibility. The second challenge, again from the fundraiser's perspective, is one of investor readiness. I think there are a lot of companies out there that have a clear intent to raise funds and a clear idea of how those funds would be utilized, but are perhaps less versed in the language of investors, i.e. having documentation in a ready state to be shared with investors and talking about ultimately what drives an investment opportunity in terms of returns and exit potential. I think the translation of a business funding requirements into ultimately what drives an investor to invest. I think that's something that a lot of the companies we work with continue to be challenged by. I'll pause there for a second, Tosin, and open it up to the rest of the panel.
Okay, thank you very much, Rob. And I think from your response, I'll just dovetail to Dr. Pomile, because I know you work in Platform Capital, and Platform Capital does a lot of investments in Africa, not just Nigeria. So in terms more of the tech and startups, as an investor, what qualities do you look for in a business before you invest? And how important is their competitive advantage, that is unique selling point, to you when making your investment decisions? And if you can also give us some examples as well.
Thank you. Can everyone? Yes. Hello? Okay, that's great. Thank you very much, Tosin. Thank you, Rob, for the intro. So just brief introduction. Platform Capital is a global investment and an advisory firm. We invest globally across all stages of businesses. As of today, we have over 161 companies globally that we're invested in. We're one of the most active investors across the continent, especially in the tech space as well. So we see all types of companies, and we see companies globally. We have investments as far as Mexico, USA, Nigeria, Ghana, Kenya, South Africa, and we continue to grow. Last year, for example, we looked at over 1,500 deals globally. We did 40. So we only do less than 5% of the deals we see. And if I focus down and on the deals that we do and what attracts us to them, what we look for. And I should say that this is our perspective. Our perspective is not the same as every investor's perspective. So I'm not speaking for the whole investment community here. I'm talking about us personally and what we see. We look for a few things. We look for founders, because we believe strongly that the business is only as good as the entrepreneur, is only as good as the team that the entrepreneur builds, ultimately in the long run. Technology evolves, business models evolve, markets and consumers evolve, but a good entrepreneur will be able to identify these and go after these and also adjust to the market opportunities. We have a saying internally that an entrepreneur is like a cub. Your ideal entrepreneur, you want that cub to emerge as a lion. So wherever, and the lion has one job, to hunt and to kill. So if I take an entrepreneur from Africa and put him in Europe or put him in Asia, he should, with the innate qualities and the knowledge he has, he should be able to deliver. Okay? So first for us is the entrepreneur and the team. We also look at the market they're serving. we don't invest in just business models. We believe business models can change. Example being COVID. COVID came and people had to adjust their business models, whether they wanted to or not. So if you'd invested in a company off the back of a business model only, you'd have become stuck. And we saw that with a few companies globally where they became stuck. We believe fundamentally in commerce. What are people buying? What are people selling? Right? If you can identify that and hone in on that as an entrepreneur and let us show us that you understand, there's a lot of interest. We also look at scalability. Once you have that commerce, you can then layer business models on top of it. Now, if something changes, the fundamentals of your business are still there. When you then change business models, is about how do you access the market? How do you sell to the consumer? So we look at business models that are sticky, scalable, diversified. And then lastly, I think those are fundamentals. Everything else comes off the back of that, whether it's your strategy, whether you're looking at accessing new markets, whether you're looking at raising funding, it's off the back of that. Technology, yes, does play a part, but once again, I say this is my view. Technology is an enabler. Technology in itself, unless you're investing in cutting edge research, which is not what we're talking about here today, is an enabler. If the fundamentals are not there, there's nothing for technology to enable.
Thank you. Thank you. I think you kind of sort of started answering like my second question, so I'll just move on to Mrs. Ochai. Sorry. So you, again, you're founder of CNC Hub, so you have all this, budding, tech entrepreneurs, and you work with them. So one of my questions now is that what would you want, budding entrepreneurs, African startups to know while seeking funding, investment opportunities? Because, there's a lot of people now wanting to invest in Africa, but what would you want, the entrepreneurs to?
Thanks for the question. So to clarify, I'm the managing partner for the creative economy practice at CC Hub. So CC Hub have been around for 11 years, and many people probably know them from the hub in Yaba. We also own iHub in Kenya, and there's a design lab in Rwanda, and CC Hub is running projects across the continent. The creative economy practice, however, is a new practice that began in November, and the creative economy practice is focused on the creative economy. And our thesis is essentially that innovation and the application of technology can capture more value for the creative economy in Africa. And when we're talking about creative economy, we're talking about those sectors that are based on creativity, right? Like music, like film, fashion, performing and visual arts, all those sectors. And what we're seeing is, I'm probably preaching to the choir, Afrobeats, Nollywood, fashion in Rwanda, in East Africa, are really gaining ground. But what we're seeing is that we're producing the content, right? But the value in many of these sectors is not really in the content. There's value from content, don't get me wrong. But if you think about it, if you think about film, for example, each individual filmmaker is probably making a great living, but guess who's making a killing? The person that owns the platform that is streaming the films. And so our thesis is we need to be able to capture more value from these sectors where we are creating so much content. And so what we're looking at is how can technologies be applied to all of the stages across the creative industries from an African perspective. This is not about building something of Africa that started elsewhere. This is about how do Africans consume content and how can we build and invest in those startups that are designing solutions that can feed an African market or other global south markets where maybe the patterns of consumption are similar. And so in terms of your question, what's the advice? I think my co-panelists have already talked a lot about what budding entrepreneurs should do. One is around investment readiness. So we see lots of entrepreneurs and founders with ideas. And so the question is, how do they refine the product? How do they determine what the market is? How do they determine the business model? And so those are all things that the practice has been set up to do. So one of our 4 pillars of activity is supporting startups working in the creative industries to develop their investment readiness so that there's a stronger pipeline of these kinds of businesses for investors to invest in. I think another thing is really understanding the markets. Because like you, I think technology is an enabler. If you don't understand how fashion works or garment manufacturing, then you can't really apply technology to address either a business process or a value chain weakness. So what we're also finding is people that are developing solutions without really fundamentally understanding how the sectors work and where the value resides. And so I think that's also something else that would be advised to startups in this area is first understand the business. The tech is the sort of enabler that enables what needs to happen. And I think there's various other things that have been said even in the previous panel about innovation. Because for us, we're not just interested in technology, we're also fundamentally interested in innovation. And so I go to lots of panels for the creative industries where we've been talking about piracy, for example, since I was born, maybe. And people are, in many cases, doing the same thing and expecting a different result. And so we're also really interested in founders that are looking for innovative ways to solve for the challenges that are besetting some of these sectors in which we're working. So those are just some immediate thoughts about, what budding entrepreneurs should do.
Okay, thank you. And I think from all your three responses, you basically have started talking about my next question. Because so last year, in 2020 alone, according to Brighter Bridges, an estimated sum of about $4.9 billion was raised in Africa, and over as many as 240 deals. So my question, and I will start with you, Dr. Pomile, is that a recent study by Boston Consulting Group showed that quite a number of African tech startups do not survive beyond Series B, meaning that they've raised their seed funding and they just cannot get scale enough, to be able to get the second round of funding. And that's compared to startups in the industrial countries. So yes, the monies are coming in, but we're not seeing companies scale the first round of funding. So they're basically underperforming. So what's in your opinion in the cost of this, and how can the African startups, how can we start, what can they do to help themselves basically? And I know you had started about scaling, so if you'd like to continue with that as well.
Okay, thank you very much, Tosin. So I actually disagree with Boston Consulting's reports on that. I don't know when that report was published, but it's not what we're seeing on the ground. And I think they're probably taking a position, and I believe that position is premature. Why? It's premature because we're just getting to the inflection point in African startups. We saw that last year. As you said, about 4.9 billion was raised in 2021. That is at least 2.5 times larger than was raised in 2020, which in itself was a bumper year. So we're just at the start of the inflection point. So I don't believe there's sufficient data for Boston to actually put that report out. I'm in this space, I see what's happening, I see the strength of the entrepreneurs that are coming out of Africa. I have the privilege of being able to compare them to their global peers, and I can see that they're not far behind. Why are they not far behind? Why can I say that? It took about 12 years for the first unicorn to emerge, the first tech unicorn to emerge, which was InterSwitch. After that, we've seen Rollin appear much quicker, and we're seeing more and more hit unicorn starters. At the moment, it's taken African startups about 3 to 4 years to hit unicorn status. We think that's going to become a norm. We from our research, which is available online, is we think in the next 3 years, we're going to see at least 13 more unicorns come out of Africa from the continent. We see the numbers, and we're very confident with that. And that's a conservative estimate. So that's why I fundamentally disagree with what Boston has said. On another note, the reason why I'm very confident in saying that and why we're seeing startups, I'll put it down to about 5 reasons. One, we're seeing entrepreneurs that are breaking away from already successful companies. So a lot of people who are going on to raise these bumper sums we're talking about were former employees of things like InterSwitch, former employees of Uber, former employees of Paystack or Flutterwave, who are going out to set up their own companies with the learnings and have seen how to grow companies and how to be investor ready. So they're taking that knowledge with them. Two, there's increasing data for investors to make more informed decisions than there was 5 years ago. So more investors are coming to the continent armed with that data point. 3, we're seeing people create more diversified and sticky business models. They're understanding the fundamentals better and building businesses around that. 4, they're getting global exposure. More people from Africa are going to YC than ever. So they're getting that exposure, which is teaching them playbooks, best practice globally. And finally, they're also increasingly what I would say some older generation companies haven't, that tech startups are doing very well in Africa. They understand the power of partnerships. They're partnering with global institutions who want to come into Africa, and they're capturing that volume. So with all these things and what I've seen, I think we're just at the inflection point for what we're going to see. In the next 2 to 3 years, we're going to see a shift in what's the African tech landscape. So I disagree with that. I don't know if that's the answer you were expecting, but I disagree with that. So there was a second question you had.
So, and I was going to say, how do the startups help themselves? But then you basically answered that as well. Like, how do they?
Yeah, I see people who surprise me day in, day out, who come and they have this idea, and I'm like, are you sure there's nobody else? They're like, no. And they're showing me, and one of the things that I'm seeing is they're able to show real data. They're able to show real traction. I had one entrepreneur who came in, and I met him through a network and said, hey, I am doing a GSV of $100,000 and I haven't even launched yet. I was like, okay. 2 weeks later, we had a follow-up conversation. He's like, I'm at 300,000. A month in, after he launched, he had moved over $1 million in GSV, right? So these are real, and he gave me access to his dashboard on the back end to see it. He's like, I'm not just telling you this. I want you to see it and see that this is taking off. So, all right.
Thank you. I think I'll just get to Rob to also, because you deal more in data and you give your investors, information on where to invest. So I kind of will ask you the same question and see if you agree with Bomile on his response.
I agree wholeheartedly. I think the conclusions of the BCG report are premature at best. So I think we're at the start of some really exciting times. I think the startup scene in Africa has gone through at least 2 generations at this point, and we're getting into a really exciting stage where applications of global ideas have found its way into an African adaptation, or at the very least are inspiring local entrepreneurs to think about adapting solutions to local problems. I think we're coming out with a growing number of entrepreneurs coming from a variety of either startups or employers who have inspired an entrepreneurial mindset in their minds, or coming out of universities from right around the world, including Africa itself, with a healthy approach towards entrepreneurship. So I think we're at the start of a really exciting, I would say, third tier in the startup generation. If anything, I feel more investor attention needs to be paid to the stages between seed and Series B. That really is, from our data, from our experience working with these companies, the most difficult stage to get on the radar of an investor. A good thing about the enthusiasm about startups in Africa over the last few years is that a lot more angel money has entered the ecosystem, whether that's uncles or aunties or executives that have pulled together a more institutional angel networks. That supply of capital is growing. In the Series B and plus rounds, we're seeing growing volumes of capital entering the space, in particular from spin-offs from Silicon Valley VC firms, as well as increasingly from Asian firms. It's in between the seed and Series B where I think there is a lot more potential for deployment of capital, but simply not enough supply. So if anything, I think more attention by investors should be paid towards startups in those stages of maturity. Certainly would not agree with there being signs of underperformance. If anything, there's a real potential to increase their performance. So yeah, that's it for me, those.
Okay, thank you. And same question basically. And then I know yours is more of a sector agnostic because you're working more with creatives.
Yeah, so everything that has been said, but I'll add another angle. In the previous panel, somebody there was asking about narratives. And I think that there's something that I'm seeing a lot of, not just in the creative sectors which we're focused, but across the tech sector, is the problem, the fundamental problem of narratives about Africa. I think it was Chinua Achebe that said, until the lion learns to tell the story of the hunt, the story will always glorify the hunter. That's the problem that we have. Because I asked the question, why is the definitive source of narrative of our tech ecosystem coming from outside the continent? Where are the storytellers that are crafting the narrative and the story of what people are building, the things that they're achieving? Where are the people on the continent? So until that happens, as it has happened in terms of our civilizations, in terms of our histories and our heritage, where there's a narrative that's crafted elsewhere and then fed to us and we swallow it hook, line, and sinker, that this is who we are, that somehow we're less or worse, until we learn to take hold of the narrative, not just change it, take hold of it. It's not about lying, right? It's about let us be the ones saying, these are the trends that we're seeing. It's a global world, right? And so this is not about saying we're insular and not wanting anybody to talk about us, but there should be sources of narratives about us that are generated by us, and we can have similarly robust sources of data or sources of trends and information that define what we want to be as a tech sector. And just to echo, for some of our tech sectors, create tech, which is where we're looking at, we're not even on day one, we're in like day -2, because we haven't started. So there isn't even a story per se. There's a story of raw material and talent and opportunity, but based on what data can we jump to those kinds of conclusions about what's performing and what's not? So yeah, that would be my response to that.
Thank you very much, and thank you to all three panelists for dispelling that faulty report. At this point, I actually would want to open it up for questions from the audience and on the line as well, before we round up. I think there are a few hands on that side. I think there was a hand over there at the back, yes. And then there was a lady in front as well.
Good afternoon. Good afternoon. My name is David. My question is for Ojoma. So my questions are for you. The first one is, what's your framework for thinking about value capture? That was, I think, when you were answering your first question, you talked about capturing value, because I agree with you. We create a lot of content. I work in media and comms. We create a lot of content, but we do not have the systems to capture the value primarily. So what is your own framework for thinking about that? And I don't know if you invest in projects, that's what you do, right? You invest in projects like that. So my next question there would be, what do you look out for in partners or prospective partners?
Cool, thank you. So in terms of our framework for value capture, there's quite a few things. One is, fundamentally at the heart of it, the creative industries and the creative economy is based on intellectual property, right? Whether that intellectual property is a film or a piece of art or a character in an animation, at the heart of it is intellectual property. So one of the things that we're particularly interested in looking at is, how do we support creators and founders to look at the different pathways for value capture through that intellectual property? Because at the moment it's quite singular, right? You do a film, and it is a film, it is a film, it is a film. Whereas there's so many other models that you can capture value through. So that's one of the areas that we're looking at, is broadening the business models that are based on the intellectual property that we're creating across multiple sectors. So that's one area. Another area for value capture that we're looking at is around markets. And the opportunity, essentially money that we're leaving on the table by not being able to participate in a range of markets, particularly on the continent, we talk about the Continental Free Trade Agreement. The reality is, in practice, how easy is it for you as a visual artist, say, because we're talking about all the sectors, how easy for you as a visual artist living in Lagos to create value and capture value from markets in Uganda or Sierra Leone or anywhere else? So we're also looking at our value capture framework also includes looking at diversification of markets and how we support entrepreneurs to do that. In terms of what we're investing in, we're interested in startups that are using or building businesses that are applying innovation or applying technology to addressing these things. So when we talk about value capture for IP, say, what are the startups that are developing tools, platforms, processes and businesses that are enabling creators or creatives to do that? So we're not necessarily investing in the IP itself. It's more, where's that point of aggregation or where's that point of enhancement? What's that business, tech-enabled or innovation-enabled business that enables the creator to capture that value? Or what are the tech businesses that are enabling creators to enter new markets because they're developing payment systems or they're using things like blockchain or whatever to enable contracting and payments and so on. So those are the kinds of businesses that we're looking out for. We're just about to launch an accelerator, in fact, that's looking at startups that are building businesses that are either enhancing market access to markets or enabling issues around information asymmetry. Because what we're seeing also is that a problem that exists in the industry is in terms of supply chains and networks for partnerships, for inputs into products that people are creating. It's just so fragmented that if you're building something in fashion or music, there's probably something that can strengthen your supply chain and your inputs next door in Ghana, but because it's not in the sort of mainstream global fashion network, you don't know about it. So we're also looking for tech-enabled businesses that are solving for things like that. I hope that answers your two questions.
Thank you. I think there are more hands. Okay. And then there's a lady over there, a couple of hands.
Good afternoon. My name is Felix Ukata, the co-founder of Sabi Writers, a content writing company. But my question is for Dr. Pomile. We've seen, apart from a few, we have founders or co-founders whose success indicator is based on how many rounds of funding they've secured. And after securing those maybe 1A or 1B kind of funding, and then they walk away. You don't hear about that company anymore. They move on to some other thing. So this year they are co-founders so and so company. Next 2 years they are co-founders so and so company. So what exactly as a VC are you guys doing to raise more unicorns for Africa? Exactly are you doing to ensure that these businesses that you give funding to are sustainable and then they become very big and become a major player in the global space?
Okay, so Felix, thank you. Can you hear me?
Yes.
Yeah. Thank you for your question. So if I understand it correctly, you were saying that there's some founders who've walked away from the business after a couple of years and go and set up something else. Is that correct? And what are we doing to ensure businesses are sustainable? Okay, great. So founder departure happens, right? It doesn't happen often, but it's something that happens in global VC. We'll see it in Africa as well. And that's for us. If you remember the response to my first question, we look at the founders and the team. We spend a lot of time there to ensure that they're right, the relationship is right, there's significant alignment, and that they can last the long haul. We spend a lot of time, an insane amount of time, on ensuring that. If they're co-founders, if they're single founder, you focus on one person. So for us, from our perspective, to make sure these businesses are sustainable after raising multiple rounds of funding, we focus on a few things. Governance is key, making sure the right structures are in place to take these companies that initially were ideas that have become solutions and businesses, to make sure they become companies with the right governance, boards, audits, tax, because these are some of the indicators that global investors look for. Do you have audited accounts? Do you have board meeting notes that I can look at? We have last year, out of our portfolio of 10 companies, 6 of them raised additional capital. And I know the amount of scrutiny they went under, where investors coming in were asking for board meeting minutes to read through them, to make sure that what was being declared to them is the same thing that had been agreed with the board in terms of strategy, financial numbers, etc. So, but we focus on that from day one. We also focus on ensuring sustainability is built into your strategy in terms of people, in terms of accessing new markets, because anything that is not built with sustainability in mind will not last. It will go on for maybe a year, 2 years maximum, and it will drop away. And we've seen that across Africa and globally. So we ensure that sustainability is built in. We provide a lot of support to our portfolio companies when it comes to helping them understand and bridge the gap in terms of governance, in terms of sustainability, in terms of understanding what the investors want or what the market is expecting from them. Because our perspective is we're taking Africa to the world. So we have to prepare African companies to be ready to be global companies. So they have to act and behave like global companies from day one. We expose a lot of our companies to investors. In 2019, we took 9 companies to San Francisco for 10 days to meet with global investors and get to meet them. A lot of them came away changed. Their perspective on their business and the expectation came away changed. Last year, we brought 10 global investors from the US and from Latin America to Africa for the first time. We took them to Nigeria and Kenya. We exposed them to the markets, helped them understand what Africa represents, the opportunity. We did that in July. I can say as of now, 2 of those investors have made 4 investments in Africa. So we're doing our bits to ensure that companies are built well, are sustainable, and are ready to go into the global marketplace.
Okay, thank you. I think we have time for 2 more questions. I think there's the lady here that... Okay, all right, and then there's a lady here that has been...
Thank you very much. My name is Patrick Oseg. I'm the CEO of iSCAT Africa and Day Treats. So I quickly want to ask, what is the easiest way for a young tech startup that has a global idea seeking for international connections, funding, and mentorship? Because currently we've been so far doing most of our bootstrapping ourselves, and with funding basically we could have gone further than where we are today, but we just need the opportunity for where we can get that link and opportunity to get funding and mentorship. Thank you.
I would want Rob to answer that. Is Rob still on? I don't know if you heard the
believe
question.
He is. And we actually do have questions on the Slido platform as well. But Rob is on.
I'm not sure if he got the question.
Basically,
I think I did, yes.
Okay.
Okay.
Can you hear me? Okay.
Yes. We just can't see you.
Okay, great. No, absolutely. So yeah, to address the gentleman's question on how a young startup essentially gets traction with investors, I think it's a critical question that a lot of young entrepreneurs will look to seek an answer to. So from my perspective, I think surrounding yourself with the right ecosystem of people that can help you find connections with investors is a critical first step. In my experience as a fundraising company, as the founder of a fundraising company myself, but also as, in my experience of many companies we do business with, is that you need some help with introductions to investors. It's very hard through general mail addresses, kind of shoot over your pitch deck and hope for a reply. I'm sure you'll get many many pitch decks on a daily basis in your inbox. It's very hard to, as an investor, kind of find the time to go through them all and to give it the necessary attention that the idea or the traction behind it might merit. So surrounding yourself with advisors that can help you build introductions and that can help you build traction with investors, I would say is a critical first step. Secondly, and increasingly this goes to how technology is also helping bridge the gap between those looking for capital and those providing it. There are a growing number of digital platforms where early stage startups can build a name for themselves. Asoko is in that space ourselves. We offer digital deal rooms to many VCs and private equity firms, and we call on startups, fundraising entities, to share their information with us, so that we can essentially put it in front of investors. And there are many other sort of platforms out there that can help build that connection. So tap into the technical solutions rather that exist in getting your ideas across and showcasing yourself to investors outside of your immediate ecosystem. My 2 points. There might be other ideas on the panel. Tosin.
Yeah, do you have anything to add?
So, I think Rob has covered it all, and the funny thing is, Rob can give you a very good experience as an entrepreneur, because I remember when Rob was starting up, we met in London in 2015, he was starting up Asoko Insights, so he can tell you real life, and he's given a lot of good advice. I think what I would say is, as an entrepreneur looking, what people, apart from your network, apart from meeting and getting what I like to refer to as warm introductions, I think it's also important for you to actually be ready. Be ready in terms of having the right information, having the right data to show an investor. There's no point in getting a warm introduction to an investor because you're leveraging someone else's relationship capital and not having the traction or the data to show that you're ready for showtime. You usually, with investors, you have a minute to form an impression. If you're not ready to form that impression in a minute, then maybe you should take some time and focus and develop and learn before you do that, because as you're leveraging someone else's relationship. So, as I said, last year I saw 1,500 deals. That's a lot. That's every day I'm seeing 3 deals. Well, me and my team are seeing 3 deals. It's a lot of information. Okay. Thank you.
All right, thank you very much. Sorry, that's all the time we have. But if you have other questions, again, I think some of the panelists will still be here to discuss. So thank you very much. Thank you.
Let's put our hands together for the panelists, please, as they come off the stage. That was a very insightful session. Thank you very much to our very able moderator. So moving on to the next panel session on EdTech innovation in education, innovations in education delivery and corporate learning. I'd like to invite the editor of Business Day Media, Mr. Temitayo Fagbule, to moderate the upcoming session. So let's put our hands together for Mr. Temitayo Fagbule, who is the editor at Business Day, as he comes on to moderate the next panel. I think we can do a little better than that, please. Thank you.
Thank you, Lily. Several, lots of doctors and professors, and I'll call on them now. First up is Professor Ahmed Bawa. He's the CEO of Universities South Africa. I imagine he'll be joining us online. Professor Ahmed Bawa. We also have with us on the panel Professor Benjamin Ola Akonde. He is the Senior Vice President and Director, Stifel Financial Corporation, US. I also imagine Professor Konde will be joining us online. We also have Dr. Nareen Hall, who's the founder in Space. Seems looking like an all virtual panel. Then we have Professor Moketsi Letseka, who is UNESCO.
Can we project those who are online now, please? Thank you very much.
I'm here. This is Prof. Letseka from UNISA.
Thanks.
Okay, so Professor Letseka from UNESCO Chair on Open Distance.
Let me get
I'm here.
Good afternoon. Thank you for joining us.
Thank you, sir.
Just want to confirm if Professor Bauer and Professor Akonde, as well as Dr. Hall, are also online.
Can we confirm if the other speakers are online, please?
Okay.
Is there a view where we can see the others, please? Or do we just have one speaker at this stage?
Okay, while we're confirming, I'll just give a bit of a background, and I think that will serve.
If you can just engage him in the meantime, and
Yeah,
we'll confirm
fine.
the others.
Okay, so before I throw questions to Professor Letseka, we know what COVID has done in the past 2 years, things that we didn't imagine. And one clear thing was acceleration of technology, and I don't think any sector or any industry was left unaffected. And what it's done is that acceleration of that adoption of technology, and education obviously is one of those. We just finished the panel now talking about investments, and of course the talk has always been about fintechs, but we also saw last year the rise of edtech, people investing in education and technology. So, Professor, how should the continent react, or more appropriately be proactive going forward? What has been the biggest impact of recent innovations on the learning process in Africa, the drive for talent, migration of talent, the price of talent? So are African countries doing better than the others, and what are they doing differently?
Thank you. Can anyone hear me? I need to know, first of all, that I'm audible.
You're audible, Prof. You are.
Thank you. Thank you very much. I appreciate that. I think if we follow what transpired in the previous panels, I think that there was talk about narratives and meta-narratives, and there's a whole basket case of stereotyping. You know, Africa has always received all these negative descriptors and connotations, and I think we can do better than that. Yes, we are classified, and these are also classifications. I mean, the World Bank, the IMF, Eurocentric meta-narratives and epistemologies, we have been classified and been put into a basket. But I think if you look across Africa, you find, despite all these negativities that are being banded across, for me, there are lots of silver linings in Africa. There's a lot of innovation taking place. There's a lot of progress. And it's just a question of how are these packaged. I think as Africans, we are not visible or making ourselves visible enough. And I think this Business Day convention is, in my view, one of the platforms and channels through which Africa can then be packaged and be made visible, so that the world can begin to realize that there are lots of things that are happening in Africa that are positive, that are constructive, that are innovative, that are contributing in a meaningful way towards Africa being one of the innovative continents with many countries. I mean, you go to Cairo, you go to Nairobi, Joburg, Lagos, Accra, lots of very progressive, innovative initiatives are taking place, but are we making these known to the world, and how robust is our media in terms of ensuring that the African identity, as we, as Africans, would like it to be, is made visible and present? And I think that's the key. I'm an educator, so I'll also speak directly from the education point of view, and I'm an educator in an open distance e-learning institution, much like the National Open University of Nigeria. UNISA is a dedicated open distance learning, and I just thought I would touch base on that. We do not have students coming to our campuses as in contact. We reach our students wherever they are, whenever they are, and we utilize technology. And believe you me, UNISA is out to celebrate its 150th year in existence, and we have been doing distance learning. We have been harnessing technology. We have been reaching out to our students wherever they are. So the very fact that we have graduated masters, PhDs, and we have produced luminaries across the world through distance, it's for me, it's a point of where we start. Yes, come end of 2019, the world all got hit by COVID-19. Most people want to project Africa as, again, a basket case victim of COVID. We do not do things like that at the UNESCO chair. We looked at the outbreak of COVID-19 and we looked at the constraints it placed upon us, but we saw opportunities in there. If we are an institution that uses technology, how well versed are we in the utilization of technologies, the digital technologies in all their manifestations, to ensure that we reach our students? And this is part of what I wanted to talk to you about. A university like UNISA or NOUN, we pride ourselves with being open, with being accessible, with being supportive, being flexible, and being affordable. What does that mean? Because we do not have students, we have to then embrace all the offerings of the fourth industrial revolution, digital facilities and opportunities, so that we can then create enabling and supportive environments for our students. The UNESCO chair, at the outbreak of COVID in 2021, we were offering our research activities, seminars, workshops, conferences, in the brick and mortar way, like getting people into the lecture theaters. And we realized that can't happen anymore because now the protocols of COVID-19 prevented that. And we immediately decided to go digital. We held our annual conferences in the past 2 years digitally. We were having massive attendance in the region of probably 1,000. Last year we had 1,400 delegates registering for the UNESCO Chair Open Distance e-learning conference. We have seminars every year where we reach out to our attendees through Microsoft Teams. We have people attending our seminars from Ethiopia, from Botswana, from Zambia, even from as far as Ghana. People are coming through. So there are many ways in which we need to really be in the upfront and say, how are we showcasing the fact that we are comfortable with technology? We, at UNISA, we recognize the importance of artificial intelligence, the fact that we need to be part and parcel of the Internet of Things, and we need to bring in blockchain technologies. We use all these resources to enhance technology, and this is basically where we are. There is a lot of technological innovations that are taking place in Africa, and I think it's important that we showcase them in this convention. We speak about them and we let the world know what we are doing that is more constructive, innovative, and progressive.
Thank you, Prof. So just more detail now so that we get a very good idea of what you're doing at UNISA. Where are you based, and what have you seen in terms of, before COVID 2 years ago, you probably could afford to have your students come once in a while to take classes, I imagine. But how has COVID changed that? Do you have a broader, are you reaching more people than before because of technology? And how have you seen an increase in numbers when you deploy technology? Are you reaching more people than you used to when you ran before COVID?
Well, I would say yes. let me give an example. Normally, when we convene conferences here at UNISA, in our lecture theaters, we probably have around, if we have 600, 800 delegates, we always felt that, well, the attendance is good. But now, since we are operating on the digital platforms, particularly Microsoft Teams, we are getting people in thousands who are registering, who are attending. In February last year, the UNESCO chair partnered with Academic International Publishing in London, and we hosted a webinar here to launch a book simply titled The Future University. To our amazement, we had over 800 delegates registering and being visible. Last year in August, we had the UNISA Open Distance e-learning e-conference. And as I said in my introductory remarks, we had over 1,500 delegates in attendance and basically being part of the deliberations into breakaway groups. So yes, I think COVID-19 has basically pushed us into a corner where, whether we like it or not, because we can't congregate, we have to find ways in which we can optimize on the use of technology. And we are beginning to see more numbers coming in. We're beginning to see more engagements, more collaboration, more discussions, more conversations taking place online. And yes, I really would say that I think even though COVID-19 has had its own downs in terms of mortality rates, but we looked into it at UNISA as an opportunity because it allowed us to be more innovative, to think outside the box and say to ourselves, if we can't meet, but we can talk to people through digital opportunities, how best can we do it? And to our amazement, the opportunities have opened up. We are seeing more numbers, more people coming through. We used to have what are called exam centers across South Africa. We have a satellite campus in Addis Ababa, and even then we open centers where our students would have to congregate there so that they can sit for their exams. COVID-19 changed that. We then rolled out what are called online exams. And believe you me, we have student headcount in the region of between 400 and 500,000. And we have seen close to 300,000 of our students sitting for exams. Yes, there were hiccups at the start in terms of the apps and how we refined, but the moment we got our act together, we were able to begin to see more students sitting in and more assessment tools online. So yes, COVID-19 has basically pushed us into more robust, innovative ways that allow us to intervene and reach out to more of our students. But also, COVID-19 has created a scenario where, in my view, there is more engagement in the activities that the university offers through the online platforms.
All right. I wonder if any of our other panelists are with us now. If they're not, I think we can throw the questions open. We can throw so the audience can take part. And for those online, please, you can send your questions to slido.com, #ABC2022 for your questions. Slido.com, #ABC2022.
Do we have any questions, or do we wrap this up early?
If there are any questions?
I presume you guys have done a great job discussing this. I don't think we have questions at this time.
So, Professor Letseka.
That's unfortunate.
Yeah, well.
It's unfortunate, isn't it?
No professors like questions. So. Well, next time, Professor.
Yes.
But it's all right. Thank you so much, Professor Letseka, who is the UNESCO Chair on Open Distance Learning. Thank you so much for your time. And thank you.
You're welcome. Welcome. It's my pleasure. It's a privilege. Thank you very much. I appreciate it.
Thank you.
Thank you to our editor for that very insightful panel session on EdTech innovation in education. So we're going off to our next panel. We're getting to the end of the day and the time that lunch will be provided for all our audience members. I hope that you're all enjoying the learnings from today's panel sessions. Okay, great. So over to our next panel session, which is on infrastructure and energy, building sustainably into aggressive infrastructure, development, and energy mobilization for Africa's prosperity. I'd like to invite our moderator to invite the panelists. I believe one of them is here and the other will be joining us online. So over to our very able moderator. Most welcome.
Thank you, Lily. Good evening, everyone. Good evening. Okay, that is more like 8. And okay, pardon me. I guess we've become so conversant with the COVID prevention, and we're glad that the United Kingdom obviously has actually taken a different direction with that. So,
where's Ayo?
First and foremost, I want to say a big thank you to the organizers for this opportunity to moderate this particular session. It's a panel session that is quite very passionate and very dear to my own heart, and I'm glad that we have people who are so much more qualified to apparently anchor this particular session. But I want to be sure that I'm made to understand that I have two of my panelists online. Okay, would that be Mr. Kalim Shah? Would that be you? Okay, great to see you. And Dr. Ungubevana. Is Dr. Ungubevana there? That is South Africa, and that is quite impressive. And I also have Mr. Dolapo Ogumekon that is supposed to be joining us in-house. Is he here? Okay, please can you put your hands together for Mr. Dolapo? And I also have Mr. Eyo Ekpo. I hope, okay, obviously is going to be joining us as the case might be. So, Mr. Dolapo, it's a pleasure. I would have stood up to give you a handshake, but I guess I have a handful of too many infrastructure. One of the things I'm excited about this particular session, I want to say a big thank you to my panelists, has to do with infrastructure and energy. It's a very topical subject matter, especially in Africa and, of course, in our own country. One of the major challenges is the fact that we are still contending with a lot of some of the global indexes that have obviously focuses on issues like poverty, issues like access to finance, issues like food security. And in my own experience, a lot of this obviously is anchored on how much infrastructure we can be able to put in place, especially with our system economic-wise, in particular the political economic aspect of managing a lot of these concerns. And now we know the fact that COVID itself, just like the earlier moderator had mentioned, has impacted either positively or negatively the way you want to look at it in the way we do business. Nevertheless, Africa still has a long way to go. And then we are confronted with some of the issues with regards to climate change. How climate change obviously is going to define or obviously is going to bring us into the fourth industrial revolution, if you want me to use that word, because Africa has lost its own strength in the first two. And so in this particular area, we should be looking at exploring where we are going to build sustainability into our infrastructural development. And we know we have a huge infrastructure deficit in Africa, sub-Saharan Africa, where is majorly our own concern, being Nigeria. We also know South Africa is oftentimes tagged as the powerhouse of Africa. And this perhaps because of the very strong manufacturing base that I strongly believe that South Africa has. But we have to explore some of the concerns which has to do with the political economy of the country. Of recent, we've been hearing too many things about one coup after the other within majorly in the northern African region. And obviously that should give us certain concerns. So one way I'm looking at to see that you, my panelists or discussants, is going to help in helping us drive this conversation. We obviously address some of these concerns. And please pardon me, they say charity begins at home. And I have Mr. Dolapo Ogumekon here, who, as a matter of fact, a chartered accountant, who has huge experiences, as a matter of fact, in infrastructural development area, especially when it has to do with issues that focuses on access to finance, some of those portfolio investments and the opportunities, of which one of it has become a major talk or a major buzzword in Nigeria, which is the modular refineries. And people imagine that a modular refinery might not be able to help us meet up with our energy output. But I guess Mr. Dolakwa might have one or two positions with regards to that. Mr. Dolakwa, you're welcome. You want to be sure that the microphone by your side is standing, is clear? Okay, great. I hope that can be quite comfortable, right?
Okay.
You can speak to it.
Okay, good afternoon, ladies and gentlemen. So, infrastructure is a bedrock of development for any economy and on the continent. So, infrastructure is the bridge between the bridge to economic growth, reduction of poverty, and access to even healthcare delivery. So what do we have on the continent? We have a gap. It depends on who you're asking for. The ADB, the World Bank, advocates a gap of $175 billion on the continent, and this gap increases $100 billion annually. And we say to ourselves, where is this gap? Where is this funding going to come from? So we, at Platform, we look at it as an opportunity. We see this bridge as an opportunity to actually just create value, but to help meet the various SDG goals. There's several market failures that have led to this gap in infrastructure across the continent. We call them critical market failures that we have identified. A few include the misplaced priorities, or what we call selecting some low-impact infrastructural development investments. Also, we identified the weak feasibility planning, program delivery, which devolves from the leadership. The leadership is, we find it ineffectual. So what do we find in typical infrastructure projects on the continent across board? Approval delays, which you can all identify with, license delays, and the big elephants in the room, the weak funding pipelines. Because a lot of these countries tend to have weak balance sheets, and the lenders have very, very rigorous requirements to access this funding. So we say to ourselves, the risk profile also for some of our projects on the continent tend not to meet their criteria. And finally, the political economy he spoke about, we're talking continuity. So let's bring it back home to the country. We have several infrastructural projects across the entire country, and we find a political class where sometimes some changes now impact the completion of some of these projects. The funders, the financiers, take note and say to themselves, how do we ensure continuity? Now, there's several ways to address this going forward, even as a continent, because we've seen it as a bedrock for us. What we require for this is a robust entrepreneurial class. So infrastructural development need not be the role of government alone, need not be the role of government. Later on, we're going to address how things like PPPs, a handshake with a robust entrepreneurial class, help deliver these projects to ensure timely completion, eventually, so you can actually meet whatever your objectives were.
All right, thank you very much, Mr. Dolakwa. First and foremost, I want to say a big thank you because I understand you're one of the sponsors of this particular ABC 2022. Please, can we put our hands together for Dolakwa Platform Capital? Interesting enough, I know that Kalim, you obviously have just come on board as the country manager at IFC. And prior before this time, I mean, you've spent over 20 years, so you understand so much with regards to project finance, as a matter of fact. And then IFC obviously is a multinational agency that obviously looks at investments from the national levels. And Mr. Dolakwa has actually had mentioned one particular factor in my own understanding, which has to do with the political economy. A lot of that high-level investment that obviously will come from IFC, we definitely have to leverage on models that can actually, how do I put that can guarantee a return and at the same time have an impact on the populace. IFC has been doing a lot in that regard, and especially in the African continent. But we realize that capital, as a matter of fact, is no longer a cheap factor, as the case is. a lot of national interests or countries are contending with their budget. They're also looking at different sources of which they can have the kinds of capital that can enable them invest in the infrastructure. And interestingly enough, this panel actually looks at two major areas. We're looking at infrastructure as a whole, as well as looking at energy on its own side, which obviously it intertwines, as the case may be. And so, where does IFC come in with regards to the new frontiers of these kinds of capital inflow, and what kinds of projects should we be looking at? And will you be so much concerned that what criteria favors one country over another, especially within the African context? Over to you, Kalim.
Thanks very much for the opportunity to speak today, and apologies I can't be with you in person. I'm just on some travel. So look, I think there is you've raised some interesting points. Now, IFC, as you point out, is part of the World Bank Group, and I just wanted us to be clear as the differential between the two entities. The IFC deals with the private sector, so we fund the private sector, and take that operational and market risk, versus our colleagues on the World Bank who fund the public sector and deal directly with the governments at a federal level. We also do some investments at the state and municipal level as well. So as you rightly point out, IFC is one of the largest funders of private investment across the globe and in Africa. Over the last 5 years, we've done about $5 billion plus of investments in infrastructure. This is just infrastructure versus the other sectors that we cover. And therefore, we see infrastructure, as you rightly point out, as a very key necessity. But as the gentleman pointed out in his discussions, there's a lot of issues around infrastructure, right? Because infrastructure, not by definition, but in a lot of cases, let's say if you're talking about energy, for instance, and power, you need a proper regulatory framework to anchor those investments. And you need a regulatory framework that doesn't change over the 20-year plus life, right? So if you have, going back to the political economy, you don't have a buy-in across the political spectrum. If there is a change in political parties, etc., during the normal election cycles over the period of investment, it can pose problems and risks for investors. So what does that mean? It means that you need to have, buy-in. You need to have a very fair and transparent process for awarding, PPPs, a very strong regulatory framework, that is built and staffed by technocrats and professionals, and so that you can have a very clear and transparent process with high governance, so that you can get buy-in, across the political spectrum, and that investors can get very comfortable that when they do these investments over a multi-year period and a multi-election cycle period, that there's some high level of certainty. So we see that as one of the key sort of missing elements, or I should say, I wouldn't say missing elements, but there is some weaknesses there that need to be addressed. I'll stop there.
All right, thank you very much. I'm not too sure if we heard him clearly as much as we can. I think some of the points you've actually made actually help us understand the fact that even IFC's instrument will obviously be taken advantage by also private interest in the country. But we're looking at long-term investment as the case is. The one we wonder how that is obviously going to benefit one aspect of the market as against the other. But let me quickly go to Dr. Ungo Bevana. And I know South Africa has a very strong manufacturing base. Of recent, though, we've been made to understand that there seems to be one or two challenges with regards to the power supply, the energy mix in South Africa. We know that the IEA report actually has said that South Africa's access to electricity is within the 43% percentile, but we know that in North Africa, for example, we have the access to electricity or power that ranges within the 90 to 93 percentile. So obviously North Africa is doing something right. But South Africa is proud in terms of its economy with regards to the manufacturing base. So what we wonder, how has it been? Because I mean, you sit on the board, you're a chemical engineer, and of course sit in several private sector advisory board, and you obviously have worked with a lot of experience in policy and legislature, as the case might be. Where do we see how South Africa got it right from the very onset with regards to the energy mix and the access of that kind of energy mix that benefits the manufacturing sector, which helps in terms of building infrastructure, as against what happens after the COVID? I don't know if you got me right.
I hear you. Am I audible? Okay, let's start there first.
Sorry, I didn't hear you clearly.
Yeah, I was just saying, can you hear me? Let's just make sure that I'm audible first.
Okay, well, sorry, are you making out what he's saying? Okay, yes, I can hear you, we can hear you, so sorry about that, we can hear you.
Okay.
It's a little bit tough one when
thanks.
we do some of these things virtually, but it's okay, we can hear you. So
Yeah.
you want to give us an
Thank you very
insight?
much.
All right.
Sure, but before I give you an insight, first, thanks for having me. And, you know, it is quite ironic that you talk about South Africa having got it right. But as of this morning, there was an announcement by our electricity utility, national power utility, ESCOM, that we are once again going to go through a round of what is euphemistically called load shedding. Quite frankly, it's rolling blackouts, simply because we do not have enough power. Now, this is a huge problem for an economy like ours. You know, what is supposed to be one of Africa's leading economies, one of Africa's most advanced manufacturing economies, but we are unable to supply power. Now, this is a very, very big problem. A big part of this, I think, stems from a long history of mismanagement at the power utility primarily, but also at local levels, at the municipal level. And unfortunately, all of this happens to be driven by what my colleagues have already sort of alluded to, and that is rent seeking, you know, when it comes to politicians getting involved, you know, in terms of state resources and the change of guard in different areas. So at municipal level, you have different political parties coming into power, and that sidetracks a lot of infrastructure and energy projects, but also at the national level as well, where you've got, let's call it shifting powers. And unfortunately also now what we've seen in recent times is, I suppose, different ideologies at the political level, at national level. And this is starting to cause real problems, even in terms of with the direction, policy direction that the country is taking, both in manufacturing, but also I think in the energy sector, where you've got different political heads, more or less speaking different languages. And I think this is a real risk for South Africa. And I think it has been a real problem for a number of countries in sub-Saharan Africa. And unfortunately now South Africa, I think, has fallen into that very trap where, you know, we are starting to feel the effects, really, I think, of lack of consistent leadership with long-term vision. And my colleagues already, you know, mentioned the issue of, you know, that when there's a change in guard, we do not, you know, financiers, the private sector does not want to see that projects are going to stall, you know, that risk suddenly increases. Now, where South Africa gotten it right before, I think, you know, South Africa is, without getting into the history of the country itself, for many, many years, South Africa did get it right. But unfortunately, that was, you know, primarily catering for a small minority in the country. And they were able to keep the infrastructure, you know, in shape. They were able to grow the economy, but of course, it only catered for a few. But now that we moved into a democratic dispensation, the challenge is that much bigger. You spoke about access to energy in sub-Saharan Africa being, in the 43 percentile. That is a great shape. South Africa itself, when it comes to electrification, has done pretty well. I think, since our first democratic elections in '94, we've got well over, I think, 90% of the country at least covered in terms of access to electricity. But we can't provide now because the infrastructure is not kept up with the demand. I think the political risk has increased, unfortunately, over a number of years. I think shortcomings in leadership, but from a business sector as well. It's not just government. We speak a lot about government failures and politicians and their failures, but the private sector in this country has shown itself to be, unfortunately, not as clean as it should be. The private sector has also shown that it's also fallible, to the same problems that the public sector has. And so I'm afraid that, the long-standing view of South Africa as having it gotten right in the past is unfortunately fading. I think we are on the wrong path. It can be corrected, but it's going to take some imaginative, and visionary leadership.
All right. Thank you very much. It's interesting because, part of the offshoot of today's conversation has to do with certain learned lessons. And with South Africa, whatever way we want to like it or not, we obviously know that there are several examples we can actually crop from South Africa to see exactly how that can help with the African narrative. But I want to go to Kalim before I come down to Mr. Dolako here. Kalim, you've had experiences in different markets. You've had within the sub-Saharan African, as we know that to be, Latin America, the Caribbean, the Middle East, and then North America, as well as Canada and USA. North Africa, by the way, is doing well in terms of some of the indexes that has to do with infrastructural development. There seems to be the concept of sustainability that has helped that has helped even the economy within this particular sub-market to thrive as the case might be. IFC obviously is doing so much in that regard. What can you share with us that can help us better appreciate some of the ideas or principles that are implemented in some of these markets that have done well in terms of infrastructural development and access to electricity or power or energy, whichever word you want to use for its populace, where we see the quality of life for the average person in this region is far better than what we can find in sub-Saharan Africa. You want to share some light with us with regards to that?
Yes, thank you. So, look, I think, I'll come back to this again, right? So, one is to have a clear and transparent regulatory framework on which investors can make decisions. And so I think that's one of the key aspects that's needed. And the second thing is, as we move forward, and you rightly point out, there's just a strong sustainability component in everything that IFC and quite frankly investors are looking for. So it's to make sure that whatever is being done is also fits within what is called the National Determined Contributions, the NDCs, which the host country has put in place with respect to meeting its Paris Accord alignment, right? So that if you can also demonstrate that you want to say put up a thermal power plant, and how does that fit in with the country's undertakings and the amount of greenhouse gas emissions it has undertaken to produce, that makes it a little bit easier for not only investors but financiers to then get approvals, especially if you're talking about needing to get cross-border financing or financing from development finance institutions like IFC and others. So I think it's holistically the sustainability component needs to be in there. It needs to be using best available technology so that you can have a very high efficiency in the power production, and also being very resilient in terms of where you're locating and how you build for climate change, right? We all see the increased, weather, extreme weather events, and those are unfortunately are not going to, become less. So you have to also be building climate smart and making sure that your infrastructure is also very climate resilient while being very efficient from a sustainability point of view. So it's actually, you need a very holistic solution, as we go forward in the infrastructure sector. Thank you.
All right, thank you very much, Kalim. Let me come to Mr. Dolokwa. I mean, you are in-house here. Some of the concerns that a lot of people have raised is the fact that it seems like the PPP model has not actually delivered in terms of some of the offerings it has claimed. You also have made a case with regards to gas being one of the drivers or the major drivers in terms of the energy infrastructure here in Nigeria. Modular refinery, for example, or modular processes are actually one of the concerns a lot of people have made that could be a way to actually bridge the energy infrastructure deficit we're experiencing here. But we are dealing with a lot of the national grid in terms of deliverables. We're dealing with also the energy value chain in terms of transmission, in terms of distribution and all that. What can you say, and then what exactly will be the next step we can take, especially for us in Nigeria and vis-a-vis sub-Saharan Africa, to make sure we get this right? And we know we are dealing with a lot of macroeconomic challenges at the same time. So you have been somebody who understands a lot of these workings. You wouldn't mind to please throw more light and help us know exactly what we should focus on in order for us to take advantage of some of the opportunities that are coming in from the international frontiers.
Okay, thank you very much. It's what I call a TINA issue. There is no alternative. The transition is the pathway from fossil fuels to cleaner or renewable energy sources. So Africa is sitting on about 694 trillion cubic. The first two countries, Nigeria has the highest, 206 trillion cubic, and I think Algeria is next, about 159 trillion. Where am I going? That's the pathway for the future. This is a resource we have to leverage upon. So it brings us back to infrastructure. Like I said, it's the handshake between the private and the public sector, because you can't leave it all to government. So what we have tried to do is working very, very closely and leveraging on the opportunities with government to see how you can begin to deploy these huge gas resources that we have as a country, that we have as an advantage to enable us properly transit. Right now we're scratching the surface. For us, it's a TINA issue. Like I said, our energy mix in Africa is 95% fossil or 98% fossil fuels. The balance is biogas.
That's true.
So Africa is going to be given a longer pathway to transit. So gas has rightly been recognized. So two things, the PPP structure. PPP is complex. It's actually professional. It should be done. It should be well engineered. It has expectations. And I think why it had floundered in the past is, I guess, the competencies that should have been brought to the table weren't there. So what we've tried to do is to enter into robust partnership, leverage of the government's gas plan. I mean, here in Nigeria, for instance, the government is rolling out several incentives to exploit this reserve. Like I said, in Africa, we have 206 trillion cubic of natural gas. This pretty much will solve our energy poverty in our country, and this will translate to the continent. So we've started this with 10,000, we have, excuse my friend, we have 40 million, 40 million SCOF processing facility in Edo State, which we know once deployed and fed into the natural gas network, NGC network, is going to help, alleviate some of the gap that exists. So what are we saying? As of today, we have several companies being bold enough to establish the modular refineries, which is a shortcut to actually providing this, and it's the solution. But we have several pockets of stranded gas all over the country. So Platform Capital will start theirs. We have 3 or 4 that can come to your memory, and together we can now leverage on this resource that is ours to exploit, to monetize, and that's been our experience.
All right, thank you. I was given 45 minutes to moderate this session, and I know time is of the essence. So I want to say a big thank you, gentlemen. But before we wrap up this session, I'm going to obviously throw it open to the audience. I know energy infrastructure for the average Nigerian is more important than so much of what we might say in terms of a lot of infrastructural discussion. So I'd like us to take perhaps one or two questions with regards to this particular focus. If you have any one or two questions for our panelists, and then we perhaps will just have their summary and then call the session a day. Any questions, please? Or comments, by the way?
Okay, we do have some comments online.
Okay,
so
online, that is true. Okay, so you want to help out with that, because I hardly can see that.
Okay, we have one question. How can potential energy startups be supported to contribute to the energy mix in emerging nations of Africa for the enablement of businesses in the same markets?
Okay, that's so much more seems so in terms of modular refinery, because I think that people say the capital outlay for that is something better off than when you want to compare that to doing some of the refineries like Dangote is doing in terms of trying to close that energy supply mix. But I'm going to come to you before I call on Kalim and Doctor. But let's take the second question so that we can just wrap that up.
Although, just to clarify, I do believe that question is speaking to even renewable energy as well, because
Absolutely.
it speaks to the energy mix
Absolutely.
issue. The second question is, why do we have to rely on the international community to develop Africa's energy infrastructure? How did the international space develop theirs?
Okay.
So some self-reliance.
So what is the third question?
The
please?
third one is, what project is Platform Investment working on in Nigeria to lift the energy transition?
All right,
So
thank you very much. I think what we'll do...
Insight into that.
Yeah, we'll take the three questions as a way of summarizing. I mean, he had mentioned the fact that the energy mix, we seem not to be saying so much in terms of renewable energy or geothermal energy to be able to bridge that energy mix. But the other question, I want to believe that IFC can actually help in responding to that when we come to that to Kalim. But quickly, Mr. Dulapo, what is your own take? What exactly is Platform doing, and then what does it take to actually kick up in terms of energy startups in Africa?
Okay, thank you very much. You see, infrastructure deficit in Africa, on the continent, is actually an opportunity to leapfrog with newer and efficient technologies. So modular technology wasn't available this way 20 years ago, 10 years ago. To do a refinery or gas project, you were talking billions of dollars. But now, this can now be done in bite-sized chunks, bite-sized amounts. You asked what Platform is doing. The IFC, my colleague mentioned about the direction the world is going. We're talking sustainability. So there's some qualities any project, any infrastructure project, any gas project must begin to think about its impact, the impact on the community, the impact on people, the impact on resources. So we also are now investing a lot in environmental sustainability principles. What am I saying? So a lot of our projects now have what we call a zero carbon footprint as a target. So yes, fossil fuels tend to remit, the carbon emitting, they have high emission footprint, but then we now counter that with either cleaning, capturing gas, or introducing newer technologies that either scrub the carbon, but end up having a net zero footprint. And it opens a world of opportunities to what we call carbon trading, carbon credits, which wasn't even available on the continent.
Presently, the government has signed into law the climate change law,
Precisely.
which obviously opens up a lot of opportunities.
So the focus is renewable, it's on sustainability, it's on being environmentally responsible. It's attaining a net zero carbon emission for whatever project. This is a must. And the finance, you have no choice nowadays. The financiers actually expect you to be environmentally responsible. So in developing your project, you want to show the impact on the community you're going to be operating in and on the people that you'll be serving.
All right, Kalim, let me quickly come to you. I mean, you heard the questions as a matter of fact, and of course we have the opinion shared here by Mr. Dolapo. Renewable energy obviously is supposed to be a part of the mix. I mean, climate change issues have become not just buzzwords. A lot of countries are looking after it. We know there are green funds that are available internationally, which, I mean, local startups can actually access with regards to driving a sustainability question. How does all of this fall in within, the concern of being able to tell our own story with the fact that we have the talent here, as a matter of fact, and why do we necessarily have to need IFC, so to speak, or some of these international concerns to usually come in here to get it right for us as the case is?
So IFC is not, saying that you have to get it right. I think, as the gentleman from Platform said, the need is for high levels of sustainability, to have well-structured projects, right? I mean, everybody has a great idea because there's a great need across the continent. So the question is, how can we make sure that we have well-structured projects that can attract financing from domestic finances as well as international finances? I mean, part of what IFC tries to do when it mobilizes funding is to mobilize funding from domestic finances and domestic investors so that we can get these domestic investors and financiers comfortable with taking these kinds of risks, right? So it makes sure that we have a well-structured project that will be able to get financing in a proper and easy way and a sustainable way, and also to make sure that there's replicability, right? So once you have a structure that is in place and other projects can come in behind that and build on that structure, and the financiers get more and more comfortable, to finance it, and hopefully the domestic financiers will then step up more and more, and you won't need the international finance.
All right. Let me quickly come to Dr. Ungo Bevana as a way of wrapping up this session. We know that the South African government has come up with different initiatives, among which we know off-grid renewables, obviously a majorly part of that particular mix. Do you have opportunities for energy startups, as a matter of fact, in South Africa to actually be contributors also in trying to close that gap? Or is a lot of this initiative just focused on the large size of corporations who have the financial muscles to be able to roll out some of these initiatives or projects?
Well, yeah, we do have instruments, at least on paper, that should be encouraging the small scale, startups to get into the sector. But the reality is that for the country as a whole, the focus really has been on the big players. So if you think, for example, we had a round of emergency procurement for power that was bids went out early last year. 2,000 megawatts of power. It's very few players actually landed that work. And this is part of the problem. We're not really encouraging the guys who are going to put in 200 megawatts on the grid. We're looking at the guys who are going to put 500, 1,000. And I think this is a problem. The tools are there, but we just need to make use of them. We do have some other instruments now, for example, with private generation that can go up to 100 megawatts. And municipalities can now start procuring from small players like that. So there are some instruments. However, I think we're not making full use of them, at least not on the national scale.
All right, thank you very much. Finally, Mr. Dolako, we're in Nigeria. For a small startup or a mid-sized startup who is interested in modular refinery or interested in off-grid renewables as a way of contributing energy production within the Nigerian energy mix, what should such an entrepreneur be looking at in terms of capital and investment, and are these doable?
Well, the first thing such an entrepreneur will be looking at is he has a lot of support. So right now we have several pockets of intervention funding, capacity building, the support of the government, because it's the way forward. So last week, the Honorable Minister talked about auto gas having a target of, I think, 1 million vehicles in a couple of years. So they're committed to supporting it's called the Gas Master Plan. So you come out, you want to do your refinery, you want to start small with modular, you're going to get a lot of help. You have those who have pioneered it, you can interact, find out what our experiences were, but in terms of the opportunity, it's just a scratch on the surface. and that's the way forward for our economy. So such a person is very welcome to come on board. Like I said, it's a strategic thrust of this government, and we are one of the beneficiaries to see how we've tried to make this possible. So we've delivered, and we welcome others to also come ahead and come on board and do likewise. Yeah.
All right. Please, can you put our hands together for Mr. Dolapo Ogumekong, Mr. Kalim Shah, all the way there joining us virtually, and of course, Dr. Lawazi Ungobevana from South Africa. I want to say a big thank you for making this particular infrastructure and energy panel section. We wish we had more time, but 45 minutes was what was allotted, and I know how this can be best managed. So I want to say a big thank you. Over to you, sir.
Thank you very much to all our moderator and the panelists, of course, for that session. We are gradually rounding this up. I believe it has been a useful interaction for the last 2 days, but obviously, as with most things, it has to come to an end. So I'd like to now invite the Managing Director of Business Day Media Limited to deliver some closing thoughts. As he reflects on the media in your best interest, please welcome Dr. Ogo Okiti as he steps forward. Thank you very much.
Thank you so very much, Wale, and I thank you all. Those of you physically present for staying up to this time. I truly, truly hope and believe that this has been worth your while. So I will not take much of your time. It's really, really tasking to be at a conference for 2 full days. So I can assure you that I will be done here in a few minutes.
Can you remove it?
But I just thought that it will be, the conference will not be complete if I don't share my thoughts on the media that I see today and the media I see tomorrow, and especially what I think your role should be. So please put my slide on. Just let me show you some very few slides. So this event has been conveyed by Business the Media Limited, but it could also have been conveyed maybe by any other media center here in Lagos or anywhere here in Nigeria, or perhaps even outside of the country. So when I speak here, I speak generally for the media, but I also speak specifically for Business Day. So it's a media in your business interest, because the reason you've been here 2 days, spending 2 days of your important time here is because you have a business. You think this is part of your business. This will enhance your business. This is something that will contribute positively to the business that you do. So media is usually considered the fourth estate of the realm. Well, that is what they usually say. And perhaps most of us are familiar with why they say so, because you have the executive, you have the legislature, you have the judiciary, but there is like an entity outside of this that also a key stakeholder in governance. So that is the reason it's called the fourth estate of the realm. So let me now ask some and I'm going to make this as interactive but as very, very quickly as possible. The first question I have, and I would like to ask is, and if there's any answers among those of you watching online, what do you think is the role of the media to you, or what should be the role of the media to you as an African? So what do you expect of the media? So in your business, when you go about and you say, oh, you media, what should the media do to you? What should they mean to you? The second question, what should the media mean to individuals and business? So I think I have an idea of what the media means to me, but I don't know what you think it should mean to you. Then the third one is, what is your understanding of the media today? Can I have a roving mic? Just 1 to 3 people, just tell me some few of their thoughts regarding these questions. There's someone at the back there. There's someone there. There's someone here. So very quickly, please. Let's do this. I have I'm sure within the next 15 minutes we should be done.
Thank you very much. My name is Franca Ayanka. So I'll be answering the first question. What do you think is the role of the media to you as an African? So my answer is this. I want the media to be transparent and very informative. So information and transparency for me. Thank you.
Information. For the media to provide information and be transparent in doing so. Yes, sir?
Good afternoon, sir. My name is Femi Odushino. Just like the lady has said, for me, I just want the media to correct the negative narrative that comes from Europe. That's my take.
Okay, the media in Africa should correct the narratives. So there is an understanding, because I'm hearing 1 or 2 claps from somewhere. So it means that we understand that there's a narrative that is negative or we don't believe in, and the media in Africa should help to correct that. Who's next, please? I'm only taking 3.
Good afternoon.
Yeah.
My
but
name
this
is
lady in front raised her, so I will take in addition to who is speaking now.
I am.
Yeah.
Good afternoon. My name is Chinenye. I'm taking the second question. I think the media, what should the media mean to individuals and business? I think it should be a platform where it can help enhance one's business. It can help bridge the gap between the customers and as in we and the customers, bridging the gap between us to foster our business. Thank you.
Okay, please bring it. Let's a young lady here, please. I'd like to take a question. Oh, sorry, answer.
Okay, so thank you so much. My name is Blessing Gerald. For me, I think I'll be going for number 2. What should the media mean to individuals and businesses? To me, I think it's a win-win thing. I'll use an instance of this meeting we're in right now. I came from Wari because I saw it on the media, which is the internet, and I took my time.
Please clap for her.
And thank you very much. So I think that I should be able to it's a win-win thing, like I said. I should be able to get something from the media because I gave up something to also come to get something. So I think it should just go beyond just getting from the people. Also look forward to also seeing how you could also enhance the people in enhancing your own self. Thank you so much.
Okay. No, because of our time, I don't want these to go hand in hand. I understand and I really appreciate, but we are really pressed for time. Most of us have been here 2 days and we really need to go and rest. So, okay, thank you so much for your answers. They have very much what I expect. Next slide, please. So, next slide. So, why, which is what you are saying, why does the media matter? So there are so many reasons why the media matter. One is, of course, to inform. To be able to inform, you have to explore. You have to go and find out. Because you can't inform when you haven't found out. You haven't gone to search. You haven't gone to look for. You have not gone to observe. You have not gone to seek explanation. You have not gone to ask questions. So you cannot inform when you haven't done all of this. And of course, you have to educate. You have to educate anyone that reads your content or at least listen to you. should be enriched in some certain ways, no matter how small. And of course, you must entertain. You must write or produce or say it in such a way that at least someone understands, and not just understands, someone enjoys it. And of course, when we now speak in terms of Africa, and it's not that that is not the case in Europe or in the Americas, it's just that largely their trajectory have gone ahead of us. Media must also help to strengthen and deepen democracy. And of course, there are so many other things: illuminate, advocate, frame issues, confer credibility. So many things like that. The media should do that. Next slide. So, medias do this all over the world. Not only in Nigeria, media, we do this all over the world, all those things. And the whole purpose of doing that, or the outcomes, is two things in my own opinion. One is to change the world that we live in. And when we say change the world that we live in, we are not just talking about changing the global world. I don't know. In this 2 days conference, the world that I live in is your business. Is your business, or whichever way, for whatever reasons that you have come to this conference and the benefits that you have got, that's my word in the last 2 days. And of course, for those watching online. So, it doesn't necessarily mean that I, as a media person here, can change the United States or can change the whole of Lagos State. But at least in my own little way, whenever I connect with people, either online, through print, or whatever channel I connect, I am hoping that as a representative of the media or as a media person, that I am changing your world either little by little or in a big way. So there are some examples. Is this the next slide? There are some examples of how media has changed the world. But let me just say this. One of the things about changing the world and the role of media, before I even go into these examples, is that it is not something that you can pick up and drop at any point in time. So I can't just say, okay, today I want the media to change my life and I pick up the media. Tomorrow I don't want the media to change my life and I abandon the media. It doesn't work like that. I think in some very, very, developed economies, they have appreciated that. And the very basic reason why I thought I should make this presentation is that I am a preacher and I'm an evangelist of Nigeria should also appreciate the role of the media. If we don't, let me just quickly make a caveat. The media is not perfect. So that is not the point here. But I'm just saying that in the UK, the only country I'm probably also familiar with outside of Nigeria is that you look at the Guardian, the Daily Mail, the Observer. There's a kind of following of those media because there is something that they do. They help moderate the extremes in the country. They help to form a consensus. They help to inform, and they help by their writing, by how they speak, by the questions that they ask. They help to develop the country, and whether you know it or not, to strengthen their democracy. So, in Nigeria, I will just give one example of Nigeria that I believe I was involved in. So you have the MMM. I don't know how many of you did MMM. Please, if you did MMM, please don't raise up your hand. Please. If you did, because there's probably one or two people here, but please don't raise up your hand because I won't greet you after. So you do. So MMM came up and it was just it was just everywhere. And we got together and we wrote some stories about MMM. The following week, I am not saying that only because of those stories. But we did the story, if you still go online, you will see we did the story in the most detailed, comprehensive way. The following week, MMM shut down. I mean, MMM shut, because how did we do the story? I called people. I said, look, do you do MMM? They say yes. Sit down. I mean, I remember I called 2 people. I sat them down, log on into your MMM account, see how it works. So when we wrote about it, we told people what will happen, how it works, and everything. We did. Before Christmas, MMM shut down. So, that is the power of the media. Many causes, they cost our fathers, they cost our mothers, they cost everything that we did. But we still wrote about it because there is no country that develops through MMM. So, I mean, anyway, so that is one. But let me talk about other people. Next slide. Do you remember this story? Okay, FIFA. So the FIFA that you know today is more transparent than the FIFA that you used to know. And if you are following the media, you will understand what happened. So let me give you a bit of the genesis. And let me tell you a bit about the power of the media. So I think it was when they awarded the Moscow, right? Russia, yes, Russia. They awarded Russia, and I think they awarded Qatar. Then the Guardian called their investigative reporter and said to him, I think there were 1 or 2, stay on this case for as long as it is necessary. By the time these Guardian reporters finished their reports, FIFA was gone. I mean, FIFA was gone. Now, can you imagine business they calling 2 journalists and say, stay on this story for as long as it is necessary? Can you imagine it? You will say you can, right? But the truth of the matter is we can't. We can't. To stay on a story consistently, every day, sleep, wake up for 2-3 years is not going to cost us, I don't know how much, but I know it did not cost the Guardian anything short of the not of something close to millions of pounds to do that. They cannot do that when they are beholden to interest. That is the whole purpose of this. Next slide. Next slide, please. Let's do this quickly. So, next slide. Next slide, next slide. Don't worry, I can talk through all this. No, let's take it easy. No. What's going on? Is this person hungry? So, everything that we do in life, everything that we do, somebody pays for it. Someone pays for it. So we must ask the question, who pays for it? Who pays for it? There's this thing that the Oyibo people say, you know Oyibo people, English. They say, who pays what? The piper does what? It detects the tone. So, when you ask the question, in whose interest does the media work? You are indirectly asking the media, who pays the media? Who pays the media? And what is also interesting, by the time you know who pays, you must also know what it costs. What it costs. And maybe because I am an economist, when I look at the cost of something, I just don't look at the cost of it. I also look at the opportunity cost. Because there's a cost, a financial cost, and of course there's the opportunity cost, and usually the opportunity cost is greater. So, who pays and sustains the media? As an audience, content, consumer, what is your contribution responsibility to the media? So let me try and say, we are in a generation where, let's be honest with ourselves. I've heard it. I'm not saying what they are here indirectly. Many times, people are asking me, why should I pay? And I'm asking myself, if you don't pay, how do I pay? You don't pay. So how do I pay? You don't want to pay. Okay, so how do I pay? But because that is an individual, that is when I begin to conceptualize that anytime I have opportunity to speak to audience such as yours, I have to preach to you. Because if we don't pay for the media, the few people amongst us pay for the media, and they will write for the few of us. And I'm not talking business day, I'm talking media. So it is always very, very important that you pay. Let me give you one analogy. I know we all have families. We all have families. If a young lady of 22 or 23 lives in her parents' house and can go out without telling her parents, it's because she's already independent in terms of money. But if she goes out and she feels obliged to tell her parents, it's because she's not yet independent. I won't go beyond that, but you all get the gist. So, we as citizens, no matter how small, we must contribute to the growth of the media. Nigerian media has come from the era of the fourth military, the fourth democracy, the battle for today is the strengthening of our democracy. It's to strengthen our institutions. It's to strengthen our communities. But if it is only 10, 15, 20, 50 people that pay for the media, it is those 10, 20 people that the media will write for. So most people, they don't write for me. They don't write for me. They don't write for me. Every day, Monday, they don't write for you. Tuesday, they don't write for you. Next week, they don't write for you. Next year, they don't write for you. And you find out that they may come, and God forbid, a day will come, the media will not exist anymore, and then there is nobody asking questions. You will say we don't ask too much now. Yes, we don't ask enough. My editor is here. He will tell you, we know we don't ask enough questions, but we can only ask questions to the extent of our resources. So the same way when you work in the bank or you work with the government and they pay you, is the same way people that work in the media also needs to go to the market. And I'm not saying, but what I'm trying to say is that you can get the money two ways. Established democracies, 1 million people. Financial Times has 1-point-something million subscribers. Financial Times, 1-point-something million subscribers. New York has 6.7 or 8 million subscribers. So 8 million subscribers. They won't write for 10 people. I don't know if I'm communicating. They won't write for 10 people when you have 8 million. So I can go on Wall Street Journal, all these people, they have, and it's not only in these countries. South Africa, I don't know how many subscribers business that South Africa has, but the point is that, however, if a media company is trying to do something for the public, they must also be encouraged by you paying for the content that you read, because content actually does cost money. So in closing, next slide please. So I don't want you to imagine a society without the media, no matter how bad the media is. I don't want you to imagine it. No matter how bad the media is, do not imagine a society without the media. because that way you don't even hear anything that is negative. And the truth of the matter is that those that want to rule us, those that want to keep the media at bay, they don't want us to know what is going on when everyone is asleep. They don't want us to. But the media's role, with their resources, is to go and find out what is happening. So, I would like to encourage you. You can read free content. There are so many free content that you can read. But if you observe those free content, yes, don't give you the depth that you need to move from one level to the other, to strengthen democracy, to deepen democracy. But in Business Day, here at Business Day, give me the next slide, we try and do that. So I want one encouragement for you. Across all our channels, we have the print, we have, of course, online. Please subscribe. If you are not already a subscriber to Business Day, please subscribe to Business Day. And you have the opportunity as a subscriber to continuously read our award-winning journalists at any point in time. And because you have registered here today, and even all of you that registered watching online, I'm giving to discount. If you're registering online as a subscriber, they will send you the mail as long as you have registered. If you're registering online, we give you 3 months free access to Business Day. Three months. All that is required is at the start of that 3 months, you commit to being a subscriber. That's all. Meaning that we will not start to charge you until after 3 months. But even within those 3 months, you still feel this is not what you want to be part of, just cancel your subscription before that 3 months. And if you want to do print, some people will always want to do print, they don't want to do online. I can give you 20% for 1 year. So my print, please go to Business Day desk there, and that's for print. You can do that, but online you will get the mail. They will send it to you, because when it comes to online, I don't need to see you. I know where to reach you. But when it comes to print, please go to the desk there, and please sign up. I think I'm done, and let me now use 1 minute to give my vote of thanks. And close this conference. Yes, please stop. So let me thank you all. And I mean sincerely, sincerely thank you all. Because for 2 days, you have given the conference the credibility that that we believe that he deserves. So please, the first and foremost, I want to thank you, audience, especially those of you physically present. And of course, I thank all of you joining online. Please and please give yourself a round of applause, please. I want to thank all the speakers. By my estimation, at least the last count, we had about 45 to 46 speakers. I cannot mention all the names of all the speakers, but those of you still here and those of you not here, I want to thank you so sincerely from the bottom of my heart. And I believe when I speak like this, I speak for Business Day, and I speak for the organizers of ABC. I mean, the governor, His Excellency Babajide Sanwo-Olu, the keynote speaker, Professor Moralu, Dr. Akintoye, Kunle Lebute Shubam, David Malinga, Mohammed. I mean, I can go on and on and on and on. I just want to thank all the speakers. We are just so grateful. Let me say this. Most of the conferences we do, we don't pay speakers. In fact, I can't think of anyone that we paid here. And most people would think when you just come online to speak for 10 minutes, that is just so easy. I wish it is. It's not. I know it's not easy. So I'm always very, very grateful to speakers. All our speakers, I thank you all. Please give them a round of applause. Now I want to thank our partners. Let me say something about partners. There's something about vision. We all have vision. And most of the sessions that we saw here today, you saw how they will say, oh, look for supporters, look for partners, look for this. It's because the truth of the matter is that we live in a very, very connected world. And the way it is designed is that it's not designed for you to succeed on your own. Nobody does. Nobody does. So I want to thank all our partners that have supported us, and I mean very, very generously. Very, very generously. Platform Capital, led by Dr. Akintoye Akindele. Thank you so very much. Thank you. IHS, I am so grateful. IHS has been wonderful. And Alluvia Agriculture, thank you so much. I mean, to all our speakers, we thank you. We are grateful for your support, and because of what you have done at this conference, we are indeed friends for life because of what you have done. Let me just say this. It didn't take anything much to convince all these partners to come on board. It was mostly just one meetings, and they said we would do it. You know, it just shows the understanding of the vision and, of course, their home values. So I really thank them. Thank you all. Then let me also thank all the people that have worked, and I mean worked, for the past 9 months on this conference. So they have worked night, day, when people were not seeing them, and of course when people see them, they have worked, called speakers, wrote letters, did everything, and of course, led by Odinaka Hilo. So thank you so very much. Finally, and I'm leaving here now, as I close, please, if you still have your book, your brochure, do you still have it? Please open to, I don't know what page this is, I think it's page 17. Open to page 17. This is a business convention, as the publisher said yesterday. This is a concept that is not even fully formed yet. But when it is fully formed, we want to do 2, 3, 4 things. Project Africa business interest. That's what we want to do. We want to keep projecting Africa business interest. We want to share ideas and opportunities. And of course, we want to be a platform for advocacy. And of course, for a platform connecting businesses and doing deals business to business in Africa. And on that basis, as you can see on the page 17, see you 7 and 8 of February 2023. Thank you. God bless you all.
On that note, we are done. Thank you so much again for participating at the conference. And as he said, we look forward to seeing you again in 2023. There is an arrangement for lunch for those who paid for it. So please see the ushers and they will direct you accordingly. Thank you again.
Award-winning content on desktop, mobile, and tablet devices, and get access to our daily e-paper. Visit www.businessday.ng/subscribe or email subscription@businessday.ng today to get started. In an increasingly changing and uncertain economy, how informed are you on the government In an increasingly changing and uncertain economy, how informed are you on the government policies, shifts in the business environment, or investment opportunities? At Business Day, we don't just inform you, we empower with intelligent insights and analysis that keeps you ahead of the competition and well-positioned to take advantage of opportunities whenever they arise. Join our exclusive community of Business Day subscribers and receive unlimited access to our award-winning content on desktop, mobile, and tablet devices, and get access to our daily e-paper. Visit www.businessday.ng/subscribe or email subscription@businessday.ng today to get started.
Our work increases the yield of the farms as well as the quality of the produce. In some cases, as much as up to 50 to 100%. I would say access to water is number one. India, for instance, has about 52% of their farmlands under irrigation. Sub-Saharan Africa has 2%. And we all know that we have challenges of drought in some cases and floods in some cases. So dry season farming will greatly enhance productivity, both in terms of yield and in terms of the number of cycles that farmers can engage in farming. So that's one. And then, of course, access to high-yielding varieties, and critically as well, access to modern agronomic knowledge. And then we need access to high-quality seeds as well. The top food-producing countries in the world today are using genetically modified seeds for their production. This is something that we must, as a country, address. We must have access to the best quality seeds to help us with drought resistance, to help us with much higher yield than we currently have now. That's something we need to do if we will be food secure as a country. These, I would say, are the three key things that we need to improve on in Nigeria. We started as a commercial farm. We were given 2,000 hectares in Cross River State by the Cross River State government. And the purpose was to cultivate rice as a commercial farm. However, by the time we went to the village, we found that much of that land was already occupied. Some houses were already built, and in many of the places, the community members were already farming on the land. So we had still a little bit to work on, but with time we discovered that the best way for us to be effective at what we were doing was not to dispossess the owners of the land, the community people, and take over the land in the name of commercial agriculture, but was rather to provide them all the services that they needed and still be profitable in that process. So that's how we transitioned from being a commercial farm to a service provider for smallholder farmers. If you look at where we are today, there are more women in the farms than men, far more. But when it comes to support from the financial sector, from governments, and all of that, the men are far more. So we need to, at the very least, support people in equal proportion. And for us to be doing that, we need to provide at least 80% of our support as alluvial to women. And that's how we can actually reach a target of bringing up more women. And as you know, we recently trained 50 women to be tractor operators, and they will go on to establish mechanization service businesses with our support. And I believe that will make a lot of difference because more of the people in the farms are women. So with women service providers, I believe that more women will be able to access the services that we provide. If you look at the statistics, you find that there are as many women as men, if not more, involved in smallholder farming. But when it comes to farmers who receive support, either from government or from banks or other institutions, you find that women are far outnumbered by men. And so we have also taken a very deliberate approach towards ensuring that there are more women receiving our services than men. We did not have to convince them at all. The MasterCard Corporation set up the largest private foundation in the world, which is the MasterCard Foundation, is to help create jobs and increase financial viability in the areas they work with, particularly in Africa. And they have an emphasis also on youth and women. And they saw the work we've been doing, they liked what we do. And for us also, this was a great opportunity to partner with them to help them achieve their objective, which of course in the process also helped us in achieving our own objective. It has made all the difference in terms of our reach. We've been able to reach a lot more farmers than we would have without this partnership. For the farmers, many of them, particularly during this period of COVID, with all the supply chain challenges and the escalating costs of inputs, have been able to access this support, which has greatly enhanced the standard of living of their families and helped them to address the shocks of the situation that we have globally today. We have been working with smallholder farmers for a very long period now, I think more than 7 years. But the numbers have dramatically increased after we signed a partnership agreement with the MasterCard Foundation to support 65,000 farmers over a 2-year period. Afterwards, we also entered into another partnership agreement with IDH Trade to support another 25,000 farmers. So the numbers are increasing. I believe they are in the region of 100,000 farmers now across 15 states in Nigeria. We are currently operating in Plateau, Benue, Nasarawa, Bauchi State, Kaduna, Kano, I mentioned Kano already, Adamawa, Taraba, Cross River. I don't think we have a plan to expand across the country. As a matter of fact, we might even concentrate on fewer states, but do more in those states. And we plan collectively across the continent to reach 2 million farmers within the next 5 years. There's a lot of interest in what we are doing from global funds, but more importantly from local financial institutions in the different countries we are working in, including in Nigeria. There's a lot of interest. Our work increases the yield of the of the farms, as well as the quality of the produce. In some cases, as much as up to 50 to 100%. I would say access to water is number one. India, for instance, has about 52% of their farmlands under irrigation. Sub-Saharan Africa has 2%. And we all know that we have challenges of drought in some cases and floods in some cases. So dry season farming will greatly enhance productivity, both in terms of yield and in terms of the number of cycles that farmers can engage in farming. So that's one. And then, of course, access to high-yielding varieties, and critically as well, access to modern agronomic knowledge. And then we need access to high-quality seeds as well. The top food-producing countries in the world today are using genetically modified seeds for their production. This is something that we must, as a country, address. We must have access to the best quality seeds to help us with drought resistance, to help us with much higher yield than we currently have now. That's something we need to do if we will be food secure as a country. These, I would say, are the three key things that we need to improve on.
In an increasingly changing and uncertain economy, how informed are you on the government policies, shifts in the business environment, or investment opportunities? At Business Day, we don't just inform you, we empower with intelligent insights and analysis that keeps you ahead of the competition and well-positioned to take advantage of opportunities whenever they arise. Join our exclusive community of Business Day subscribers and receive unlimited access to our award-winning content on desktop, mobile, and tablet devices, and get access to our daily e-paper. Visit www.businessday.ng/subscribe or email subscription@businessday.ng today to get started.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa, Latin America, and the Middle East. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one but 6 solutions. With co-location, new sites, in-building, and distributed